All right, everything looking good on my end. Let's get this stream started. All right, welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so today we got quite a bit to talk about. Going to rip through all of our traditional assets, market movers, and then obviously take a look at our commodities and our cryptocurrencies as well. Going to mix up the order a little bit too and talk about some key things. So today we're going to actually get started with our crypto markets and take a look over there. Let me know you can hear me all right in the chat and everything. All right, excellent. So starting with Bitcoin futures chart here, as we just kind of take a look, we can see essentially a key thing that we're paying attention to at this point in time is our 200 exponential and simple moving averages here in blue. We have broken down below them, started to flip the slope back over red, and now while we still have the 200 simple above the 200 exponential, we are well above all those moving averages, and we are still on trend with the 8 and 21. So as of now, although we're at key resistance levels and there's a lot of overhead resistance here, we are overall still looking good here. On this chart specifically, we do see quite a bit of weakness in our TJD TDMACD, and then obviously we are in the danger zone for the stochastics on the jewel thief here. We're up inside the bullish control zone still, but we broke down and crossed below the blue, below the pink, and got the hard sell signal. What we're paying attention to here is if we break down out of this zone, that's going to be a confirmed sell signal. And then if we just switch over, we'll take a look at our weekly and everything while we're at it. We did cross our weekly back up here, so that is a good sign once again. This week has not had much price action. We've basically just been kind of fighting to hold on to this area. But we do see multiple green histograms, although we are well below our slope line. The slope line has flipped over blue, and while this often results in a rejection of the histogram and then selling back off, there is always a possibility that we break through that and continue the trend to the upside. We did exit the bearish control zone. We did get our hard buy signal, and then we did get our cross. So all those being like, you know, essentially good things, except for that slope line we're paying attention to. And then here on the monthly, we'll notice as well that we're able to hold on to the 21 moving average on the 21 month. We do have 3 months in a row of red histograms and a hard sell signal, and now we do have a single green histogram. So the monthly is still biased to the downside, but starting to look neutral as we're seeing some strength come in here with like 2 months of nice positive upside candles. But we start to get a different picture when we pay attention to the actual Bitcoin spot market chart. So let's pay attention to what we're looking at here and what is sort of the key determining factor for me. We're seeing a little bit different of price action as we have discussed once again the 200 exponential moving average and 200 simple moving average. We were able to get back on top of the exponential and then burst up to the 200 simple, and we are maintaining price action above that for now and have regained the slope on both those moving averages. So that is overall good. But when we look down here at our indicator oscillators, we'll notice that we have essentially still inside of the bullish control zone, but we have a sell by sell signal. We are sloped to the downside on both of our stochastics, and we're nearing the exit of the bullish control zone. We also have divergence between our high right here and the next high right there, which is essentially telling us that this trend is like unsustainable and likely to break down. We're starting to see quite a bit of weakness on the TJD TDMACD as we have more reds than greens starting to show up as we make higher highs. And then we'll notice also this is the Bitstamp chart that we do have declining volume as well, which is obviously important because it tells us that while we're getting moves to the upside, we're not getting those moves confirmed by our volume. So here we have a high on the initial breakout, and then we just have declining levels of volume slowly but surely kind of creeping in since then. So now let's take a look at I'm going to do a deep dive on Bitcoin today as it's been a while since we've talked about some of these key factors. So that's why we're kind of starting off with it first here. So basically what we're looking at is we have a key Fibonacci level from our top back here at just over 64,000 down to our bottom at just around 29,000, 28,000, etc. So we've drawn from the top to the bottom, and that is in red here. So I'm going to actually highlight this one, make it a little bit brighter here, so where it gets our attention. Matter of fact, let me make it a light color too. So we'll make it white here. So we can see some key things took place. On the way down, obviously, we didn't have this in place yet, but we noticed that we bounced perfectly off the fib here. We see some support here, 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 and then resistance here. And then we break down, you know, obviously through that next level, see a little bit of a hold up at some of these other key levels, but we see some very clear confluence at like the 382 and the 236 to the downside. And then, you know, obviously along the way, and then back on the way up here, you know, we see some resistance here, break through the 0.5, come back down, find support, come back up to the 618, see some resistance, break through it. Now we're finding support. So that tells us there's a high likelihood we could get up here to like 54,000, which our target since we got the cross has been between 50 and 52,000. 54,000 is not too far of a stretch. So we see some clear confluence taking place, and it's very obvious that, you know, obviously like the bots, algos, and market makers are paying attention to those key levels as well. Now I've also drawn in a couple other key levels here. You'll see, like, obviously, you know, if you've watched the stream for a while, you know what I'm doing here, but you'll see the blue level down here has acted as a pretty clear like support and resistance along the way. We see the same with the green here as well, quite a bit of confluence on those green levels at some of our tops and our bottoms. And then the same with the yellow, you know, obviously through here. And then the orange was a very clear top right here, you know, very clearly acted the yellow here as support, the orange as resistance. And then here we have the red has been acting as support regularly. And, you know, I'll start drawing in those levels and paying attention to them, especially like depending on what time frame I'm looking at, to try to get an idea as to, like, you know, what are the key levels we're paying attention to? What are we seeing reactions off of? So we'll see here the green level was very clearly resistance and support this whole entire time. And then we'll see, obviously, we see a little bit of a, you know, clear support and resistance on this red level here, down by the blue level here on the way down, as well as on the way up. And then if we switch back over here, and you'll see what I'm doing is I'm essentially drawing in key levels, and then I'll take the actual fib tool and see how they correspond to it. So if we go from the bottom here, what I'm trying to figure out is like, you know, is this our top right here? Is this going to be our top right here? Is this potentially our top right here? And that's when we start to see all these, and let me just change the color of that one more time. I'm going to make this one white and just a little bit brighter. That's when we start to see some serious confluence showing up. I was talking about this specifically in the group. You know, here we see a couple of these lines lining up. We see it lining up here. We see it lining up here. And that's pretty much it. But as we get slightly higher, we come up to this next potential top, and it doesn't really line up. We see a little bit of confluence between some of these levels, but nothing too crazy. And then here, when we place it and we look at, is this our potential top? You know, it's still a little early to tell, but we can see we have very clear confluence with the blue line, the green line, the yellow line, and the orange line, and then here our red line. And while each of these has had a different level of support and resistance along the way, some more than others, the fact that we have that much confluence is definitely worth paying attention to, that this could be our potential top. Now, in order to confirm that this is a Fibonacci top, what I want to see is a pullback back down to the 236 level, which is like that 44,167. So until we get back down there, this isn't, as far as I'm concerned, confirmed to be a top. And again, we could still push up here and start seeing some of these levels line up. We could easily get up to the 886, and then we see like confluence levels here. But it's at least worth paying attention to now that we're seeing some very clear interactions taking place. So that's what I'm looking at. Again, you know, sort of like predicting where the top might potentially be or what might result in the future. Still a little early to tell, obviously, if that's going to be our top. But again, we're trying to look ahead and see what our potential targets will be for like a top or a bottom based on Fibonacci extensions or like how the bots, algorithms, and market makers are interacting. So here we can see, you know, very clear amounts of interactions between our white and our red fibs at different times, which leads me to believe that, you know, both of these are key factors currently in the market. So, you know, definitely worth paying attention to, but we don't want to get too far ahead of ourselves. making like big decisions based on those levels. If we switch out here now to the weekly on our spot markets, we'll see we've reached some key levels. We're definitely seeing some weakness here, especially going into our close. And then obviously we got the hard buy signal. We do have multiple green histograms. We're above the 0 line. We have flipped over the slope line blue here, but we're still below it. So we need to be careful of a rejection, which is very common here. But overall, looking decent, decent to good. We have the cross back now in green as well for the 8 and 21. So that's definitely a good sign. And then if we switch out to our monthly, we'll notice here we're back on top of the 8, still well above 21. We do have the hard sell signal. This looks exactly like our futures market. Nothing different here. And then if we switch over to, this is just a Bitcoin chart, but on Coinbase, and I have like our traditional indicators brought up here. While I like to use my own personal indicators and fine-tune them for success, I do like to take a look at traditional stuff, as what other people are looking at is always important. So I have our MACD, RSI, and stochastics. So let's just take a look at what we have here. Now we have basically 3 clear tops. This one could still push higher easily, especially after like a nice daily candle today. Although, you know, it did. The way I look at a candle is if we have a big red candle and then we can recoup at least 50%, to me that looks bullish because we're showing strength after a weakness candle, and then vice versa. If we have like a big green candle and then we sell off more than 50%, it starts looking weak. So what I'm paying attention to here is we have, obviously in hindsight, a very clear top that took place right here. Let's switch these over to green. And then we have a very clear top that took place right here. After each of those tops, we got a nice pullback to a key level. And then finally, we have a potential top. Now, it's still a little early to tell, and I usually like to see like one more big push up before we call it a top. And then also, I like to see typically like these spaced out a little bit better. So in all actuality, I would like to see a top like a little further over here or something like that, you know, for a perfect looking one. But, you know, essentially what we have is 2 ways we can look at this, and then we're going to look at it in relation to our indicator oscillators as well. So I'm taking like the actual tops here and just kind of connecting them potentially for what we'd be looking at, you know, something like this, and then looking at how does that correspond to like price action. Maybe this could be like slightly lower here, but overall we see a very clear interaction on the top on like 3 to 4 points right here, and then we see a pretty nice interaction on the heart line as well. With a pretty clear like bottom here, only one touch on it, but overall we've stayed like pretty bullish while we're in this pattern. And then the other pattern that I was looking at inside of that was obviously our little like wedge that we already broke down from. So that was forming basically an ascending wedge. And then, you know, once we broke from this wedge, I was expecting a retest of the heart line and then a bounce. We retested the breakdown area, and now we're starting to show some weakness. So oftentimes that's what you'll see. A lot of times you'll break down from a level, push up to a higher high, and that will like squeeze out any shorts that are in play for the breakdown. And then the trend will lose strength, and then it will break down to like the bottom of our pattern or to our next like key support or resistance zone. So while this is looking overall like it's bullish and it's a move up, this to me looks like a bullish bounce inside of a bearish retracement. So we sold off, obviously put in a low. We've bounced up a large portion of the sell-off, and now we're showing weakness. And then potentially what I want to look at here is this high, and this high. And then let's look at it on our indicator oscillators on the daily chart. So we have 3 very clear highs here as well on this chart. So we have the first one right here. Then we have a lower one right here. So let's switch these over to red because they're clearly in a downtrend, as opposed to price action, which is in an uptrend. And then finally, we'll look at this little one down here. And once again, we have a lower high. So we have one high, a lower high, and then a lowest high. Here we have a high, a higher high, and a third higher high. So here we have what's taking place is bearish divergence between our indicator and the actual price action. So we see triple bearish divergence on the daily on our Bitcoin chart. And then here, let's take a look. And that was our MACD. Here we take a look at the RSI and see what we have. We have a very clear high right here on the RSI. And then we have, depending on how you're looking at it, you know, if you're looking at this as the macro high, or this is essentially divergence between 2 points in a single high, we're essentially seeing a lower high or a series of lower highs right here. And then finally, as we were talking about before, when this started peaking out and we wanted to see, does it put in another lower high here? We have essentially another series of lower highs. So we have a high, we have a lower set of highs, and then finally another lower set of highs. And again, we see those correspond with price action, once again, with triple bearish divergence as well. And then that's our RSI. Let's take a look at the stochastics and see what they're telling us. And once again, we have a high on the stochastics, or again, you could argue a series of highs, a high and then a slightly lower high, but very clearly a high. And then here, once again, we have another series of lower highs, so they're lower than our initial series of highs. And then finally, what we're paying attention to is obviously like this peak, or the peak followed by another one. And then again here, we have another series of lower highs. So we have essentially, you could argue this is the same high as this series of highs right here, but essentially like equal or lower high with higher highs on price action gives us once again bearish divergence. So we have triple bearish divergence on the stochastics, the RSI, and the MACD all on the daily, which is something that I'm paying close attention to, because if you've paid attention to this channel for a while, you will notice that I was literally the only person talking about what was taking place right here, and how I literally predicted the exact top on Bitcoin. And what was taking place was we had triple bearish divergence taking place here as well. So again, if we look at that exact same signature, and again, just for like confluence levels, let's pay attention to what we have here. Not only do we have it starting to demonstrate on the weekly, like we're seeing on traditional markets now, but Bitcoin was putting in a high, a higher high, and then a higher high. And then if we look here and pay attention to our indicator oscillator, we had a high, a lower high, and a third lower high, which again, obviously bearish divergence on the MACD was taking place. And again, just for a little confluence, just to pay attention and keep this in mind as our price action develops, and being able to look back at it, we can see how that corresponds to the actual price action with our like series of highs here, high here, and then high here. And then obviously that resulted in triple bearish divergence, which was an over 50% sell-off. And then again, if we just pay attention right here as well, we'll see the same thing took place. And again, this is not going to be a 100% all the time like functional thing, but what we're paying attention to is, are we seeing confluence between what's taking place on a certain asset or asset class? So here we have triple bearish divergence taking place, and then here we start to see convergence between those 2 points as we actually put in a lower high right here. So that tells us that this is probably going to be a rejection if it rolls over. And then finally, if we look down at our stochastics, once again, we see the exact same thing took place. We see a high right here, another series of lower highs take place right here, and then once again, peak in price action, but another set of essentially same or lower highs taking place right here. So, just to kind of clear it up and give us a little clearer of a picture. Sometimes it's hard to draw with that still minimized. But we see actually some divergence taking place here as well. And there's two ways you can look at divergence. You can look at either the peak of the blue on your stochastics, or you can look at the area of the cross. Now here we saw a lot of choppiness taking place. Also, I'm using on this indicator oscillator stock settings as opposed to like my personal settings on like the Joule. So it's important obviously to do what works for you, but I do like to see what's taking place in the markets. So here we saw that triple bearish divergence resulting in a 50% sell-off, and then here we're seeing that same triple bearish divergence developing. So are we expecting a 50% sell-off? Not necessarily, but we're paying attention to it because it's essentially the market telling us something very, very important. And then here we'll see one more time, and then we'll jump over to our shitcoins, our altcoins, and then we can kind of pick up where we normally would. But I just wanted to start here and pay attention. We clearly have, descending lows right here. Depending on how you want to look at this, we just have a series of lower lows taking place. Excuse me. And what we're paying attention to once again is, do we start to see divergence taking place between our indicator oscillators? So here we have a series of lows right here taking place. And then here we have very clearly another series of lower lows. So we see price action is continually selling off, but to lower lows each time based on our candle closes. And then when we pay attention to our actual indicators and see what's taking place here, well, we see a bunch of energy was expended on the MACD to get down to that low right there. And then we see the following push down it took much less energy. We have a much less red area right there. And then finally, we have our final like push down for our lows right here. And again, we see the most energy on the initial push down. And then here we see essentially the same amount of energy on these next two pushes between each other. So again, it's a form of divergence. In this case, it's bullish divergence because the price is trending lower 3 times in a row, 3 different drives, while we're getting more energy on the initial drive. And then you would expect it to take more energy to push the price even lower, but instead it takes less energy, and then finally we push down even lower, and it takes an equal amount of energy to the previous drive. So what it's telling us again is that this trend is unsustainable. We cannot keep making lower lows with less energy expenditure. So eventually, what do you see happen? You see the rubber band effect, and price springs back in the opposite direction. So we saw here, and again, if we look at the actual all 3 of these indicators, we see again a low down here. We see again a very clear higher low right here. And then once again, we see a very clear higher low right here. So when I see an asset doing this over and over again and trading extremely technically, when it puts in like clear levels of, divergence, and then the divergence plays out. Now here we see a slight divergence between this indicator and the other ones, depending on how you're looking at it. If we're going by the crosses, we'll see we had the cross back up here. If you're going by the actual peaks, we'll see that we have the actual peak is down here. It's higher here, slightly higher here, and then once again, slightly higher here. So, try not to cherry pick too much, but when I have 3 indicators telling me the same thing like that, I'll pay close attention to it. If I have all 3 of these indicators giving me a total of 9 points to pay attention to, and then 3 points on price action, I have 12 total points that I'm paying attention to. And I need all 3 of these to be either equal or, in this case, higher. But down here, if I have like 1 point diverging between the 3 indicator oscillators, I will still give this a heavy priority, of likelihood to play out. In the same way that, for instance, here, we have the initial peak right here, and then we have part of the same pattern. We have a lower peak right here, and then here we have an initial peak right here, and here we have a higher peak. We actually have like a micro divergence taking place on just this single oscillator, that if you were to actually move that, the peak in price action that's corresponding to it is this one. So we're seeing a bearish divergence taking place between those 2 points while we see a push higher. And then that's probably what resulted in, more of a heavy sell-off here. So again, what we're paying attention to, we basically have 12 points right here, all giving us bearish divergence, followed by a massive sell-off. Then we have 12 points right here, all giving us bullish divergence, followed by what I would consider to be a massive rally. In Bitcoin's case, it's a little bit less than most, but just going by our candle closes to our candle close price action, over 67%. We saw some assets rally 200 and 300%. So I would call that a massive rally. Anything over like 20 or 30%, I would say is a pretty epic rally in a few days or a few weeks. So a 50% drop followed by like over a 60% push up is obviously a very nice rally. So what I'm paying attention to now is if this triple bearish divergence plays out the same way that it did back here, we don't necessarily have to get another 50% pullback. As a matter of fact, we could see something closer to this where we break down from the highs and then we actually come down here and put in like a 35% pullback or 30%, 33%, 40%, whatever, but essentially just put in a higher low than right here. And that's actually very bullish to me. A nice big heavy pullback to a higher low and then the bears run out of energy tells me, hang on a minute, maybe we are going to continue pushing higher. But as far as I'm concerned right now, when I see a heavy sell-off like this and then I see a large reaction rally afterwards back up to key resistance, that to me looks like what people call a dead cat bounce. But because the follow through comes in here, I call that a bullish retracement of the bearish dump. Now, when does that become invalidated? Once this is no longer an internal retracement. And by internal retracement, I mean the area that we're paying attention to is obviously the high back here to the low back here. So once we break either to the downside or to the upside out of that pattern, it's no longer an internal retracement. Obviously, we were bullish far before then because, in Bitcoin and Ethereum and all the shitcoins cases, we took an entry point down here at 30,600 was our entry on the 4-hour, which transferred over to the daily. And the reason we took that entry is because that was the 821 cross back here for a scalp trade to the upside. And then we take profits along the way at key levels. And then the goal being still have part of that position open, even though I'm actually bearish on the markets right now. The idea being that we got a beautiful entry basically at the bottom at the cross, even though we were in an overall bearish trend, and it went from essentially what was a scalp trade to a swing trade to a positional long in the event that we break out to the upside. So while the percentage of my trade open has diminished as I've taken profits along the way, I've locked in those profits. So one, I can sleep at night. 2, I don't have to worry about giving that back to the market. And then 3, once we invalidate key levels and break out to the upside or whatever the situation is, I can always re-enter at a higher price with higher conviction. Because for me, the key is to lock in gains, protect my principal, because once that's in my bank account or in my trading account, it's in my trading account. I can't lose it. But when it's active in a position, if we just get some random huge candle to the downside or whatever, there's nothing I can do about it. It's done with. I could use stop losses on it, but the goal is to not get shaken out on the little pullbacks as we go up. So that's just a little overlook on Bitcoin and what I'm paying attention to right now. So we have some key Fibonacci levels that have been interacting like very powerfully. We have some key divergences that have been playing out very powerfully, and that's exactly what allowed us to call the top on Bitcoin. It allowed us to call the bottom on Bitcoin, and now once again potentially the top on Bitcoin. Now, in order for this to 100% look perfect to me, what I would rather see take place is I would rather see as close as possible to an equal gap between all of our points. And my point being that, essentially, if we use our drawing tool and we just look at from this point to this point, the closer we have in similarity between the points, the better. So here we had 21 days, which is obviously 3 weeks. Nice round number based on the days in a week, obviously. Here we had 30 days, so it was about 4 weeks. So there's a slight difference between these points. But overall, they're relatively, close to each other. And then here we'll notice that we had between those points 28 days, so 4 weeks, which again corresponds pretty well with our first set of points right there. And then once again, from here to these points, we'll see 28 days, 4 weeks. So that's perfect. This is like our ideal perfect situation. They're spaced out almost exactly perfectly, and then the difference between those points correspond on a line literally perfectly as well. So we had a very clear support right here. We had a very clear time frame. Everything was perfect. And then again here we'll see we have a very clear resistance right here that we're potentially bouncing off of. And then let's look at our time frame as well. If we go from this point to this point here, and again, what we're looking for is that symmetry. So we have 13 days, which is essentially 2 weeks. So we like that. It's a nice round number divisible by 7 days in a week. I mean, give or take a day, obviously. And then again, from this point here to our next point, we can't quite confirm that this is a top yet, obviously. We're still paying attention, but we only have 10 days. So in all actuality, what I would like to see happen here is I would like to see a push up today or tomorrow to a new high on price action. And I would like to see that high tag this resistance line right here, which would be that 52,000 point. And then I would like that to correspond with a lower high on our indicator oscillators. Now, again, that's not always going to be the case. But for me, the more confluence and the more technical and the more I look at it as like art. The more artistically, visually, technically pleasing this is, the more likely it is to play out, because more people are going to see it and say, oh, look at these points all spaced out. Oh, look at these points all spaced out. Oh, look at this clear resistance line that we're bouncing off of. Look at these clear divergence points that we're seeing taking place. So that's why those things are so important to me. Now, you're not always going to get the perfect picture. Sometimes these charts are fucking ugly. But you know what? When they're pretty, the likelihood of them playing out is extremely high. And that's what I'm paying attention to right now. That's what I'm looking at. Again, I am more of a conservative investor. A lot of people out there have already FOMO'd in, jumped in with mad leverage. They're all in. They're calling for new 100,000, $250,000, $1 million price targets. They're all levered up to the gills. They're borrowing against their Bitcoin that they borrowed against their altcoins for, that they borrowed against their shitcoins for. That's perfectly fine. That's not how I trade. And I think that most people will find that while you can recklessly trade in a never-ending bull market, that's not sustainable in actual markets with fluctuations over time. So there we have essentially our Bitcoin chart and what I'm paying attention to, some of my little trade secrets and the things that essentially make higher level of success. Because in the end, it's all about probabilities. Bitcoin could literally just break down $20,000 right now and just get wrecked. And everybody would be wondering why. Or it could just jump up right now, all of a sudden a new all-time highs, and all of a sudden it's at $75,000 and people are looking for a reason why. Anything could happen. It's all up to the market makers. It's all up to the algorithms. It's all up to, like, you know, the whales in the market. Anything can happen. We could get some crazy, you know, technical thing that plays out. We could get some crazy, you know, government FUD. All of a sudden the United States bans Bitcoin and we dump. All of a sudden the United States says we're putting, you know, the Federal Reserve comes out on Friday and says we're going to put Bitcoin on our balance sheet. Like, whatever the situation is, you don't know what it's going to be. Usually the charts will lead up to it. So that's what we're paying attention to. That's what we're seeing in the technicals. And, you know, that's a little edge on the market. And I think that you will find that the reason I use most of these techniques is because they are proven to work over and over and over again. And most of the techniques that I use have like a 66 to 75% probability of playing out when you're able to identify them, especially like 3 drives of divergence. And then when you couple multiple techniques like moving averages, Fibonacci's, and divergence together, you will find that the probability of success goes up exponentially high as you end up with, like, you know, probabilities of like 75 to 85% on a lot of these trades. So let's look at Ethereum next. Ethereum with our bearish Fibonacci from the top right here to our bottom down here, we essentially see a retrace up to some key levels from the initial bounce off of our low right here, or you could argue the low right here. Basically the same low as far as I'm concerned, but I consider this the low because of candle closes. This one actually closed lower than the previous ones. Again, we saw that same bullish divergence taking place between our 3 points right here. So, you know, obviously giving us a clue as to what's taking place in the markets. Oh, I'm sorry. We do not see it on this indicator. We see three lower lows on that one. We see the bullish divergence taking place here. 1, 2, and then 3. I believe on the, I want to say on the regular RSI, it did show bullish divergence though, but maybe not. I know Ethereum was acting a little goofy through here. But essentially it has stayed stronger by staying above its 200 exponential and simple and keeping a positive slope for all but these 2 little like pushes down here. But it's been underperforming lately. So while we saw some very defined levels on the Bitcoin chart and we saw, you know, essentially an Elliott wave structure taking place, let's take a quick look at that. I did mean to mention that earlier. We essentially saw like a 5-wave Elliott wave structure like potentially developing here, where we have an initial push, a retracement, a second push, a retracement, and then potentially a third push, you know, depending on where we get to, but let's just assume we get a little bit higher price action. That would give us essentially our 5-wave structure, and then we check to see, like, does it look valid? Well, there's a couple little basic rules. 1, push up here. 2 is the retracement of that move right there. So then we pay attention to the actual Fibonacci retracement from our, oops, sorry, wrong tool. From our low right here to our high right there. And we'll see we almost perfectly tagged the 382. So that looks good to us. And then we'll see our second move up here was the push from the bottom of the 2 to the top of the 3. And then again, we see a push down, almost perfect retrace to the 382. So that looks good to us. We don't know yet on the next one, but now the next thing to validate this is when the 4 comes down, we do not want to retrace inside of the 1 by more than a wick on a longer time frame. So here we're on a daily. That's acceptable because that's what we're looking at. And we do not retrace below the top of the 1 with the 4 at all in this case. So that is, of course, good as well. And then what we want to pay attention to is the final rule, which we won't know what's going on, or like our final key way of analyzing this. We're looking at the actual move itself. So we saw a $12,905 move right here. And then for the wave 3, we see a $11,500 move right here. So the 1 as of now is the longest and the 3 has completed. So what we need to make sure is that from the bottom of the 4 to the top of the 5, we need that to be shorter than the 11,520 for this to be valid. Because in order for a 5-wave structure to be validated, we need the 3 is often the longest, but it's never the shortest. So because the 1 is already longer than the 3, if the 3 becomes the shortest because the 5 is longer, that's going to invalidate this structure. So what we need is 11,500, let's say, or less from the bottom of the 4. So if we just take our measuring tool from the bottom of the 4, we will see that the key target for us for this to top out at roughly 11,500 will give us confluence at that is our 55,524 zone, and right around the top. So we could easily see that slightly underperform and top out right around like 52 or 53,000 area, which is, I don't want to say what we're expecting, but what we're anticipating. Now it is possible, obviously, that this has already topped out, in which case it would be a fully valid 5-wave structure as well. So now here, looking back at the Ethereum chart, we see this was essentially the 1, and then we have that slight little pullback 2, and then the 3 pushes up here, a heavier pullback on the 4, and then here we have this pathetic little wave at the end here. Now, this doesn't have to be a clear defined 5-wave structure. I consider Bitcoin to be the market maker, and usually it's like much more structured and will validate like the moves within the market, but a lot of the altcoins and shitcoins will just perform differently based on, you know, whatever everybody's FOMOing into, wherever, like, you know, the money is going. So but what we do want to pay attention to here is when we put in this W pattern right here on Ethereum, what we were paying attention to was once we broke out from the neckline, which was essentially like our 382 fib or slightly below that, that was essentially our measure move playing out. So we got the measure move of our W pattern. You know, we got the move up to the 618. Now we are still consolidating on top of it, but we had discussed it specifically in the group and the entry on Ethereum and everything, and that trade has basically all played out at this point in time. While I do still have part of that position open as well, the let me see, entry target was like 2100. The first target was 2675, and then the second target was 30,014 roughly, for a total of like over, it was like over 45% gains. And again, I do still have a portion of the Ethereum trade open for now, but as far as I'm concerned, that trade has all but played out. But you know, that trade has turned from a scalp into a swing position, and if this continues to the upside and breaks out to new highs, it will turn into, you know, a long-term position, which is obviously very good, and that's what we're going for. High levels of confluence, you know, and then we can always enter into a larger position at higher levels if we so choose to, but we have locked in some of our gains already. We got an amazing entry back into this, and just to give you an idea as to the entry and how we determine the entry on Ethereum and Bitcoin and all the other alts is, we just went by the cross of the 821 back to the upside right here. So on Ethereum, you know, if you are looking at the 4-hour, you could have took a scalp as early as 1850, or you could have waited till we were back on top of the 200 exponential and moving average with a positive slope to the upside, which was like around 2100. So either one of those would be acceptable, or you could ladder into the trades accordingly. But you'll see we got the hard buy signal on the 4-hour. We got the positive blue slope on the TJD, TDMACD, and then we got the 821 cross here, and then the final confirmation obviously being once we were inside the bullish control zone, above the 200 exponential on simple, and everything was lined up perfectly. So, and even if you weren't going to go down to the 4-hour, you could have easily just taken the same position, but just off of the daily, because once we crossed above the 821 cross right here, above the 200 exponential and simple, you could have just taken the entry at 2,121, and again, just been in the same trade with a higher level of conviction. So, and we'll see, obviously everything was looking good from there. We had our everything lining up perfectly, but again, we don't want to overstay our welcome on these things. So if we look at, let's look at our longer time frames on Ethereum. Weekly chart was able to avert the cross. We never saw the 821 cross to the downside. That is good, but we are showing some weakness now. We did cross back above the blue slope line, multiple green histograms. That's good. That's definitely a good sign. And then the hard buy signal as well. So Ethereum still looking overall less bullish on the daily because it's just consolidating here, but the chart looks much more bullish like long term, as it was able to avert a lot of those crosses. Now here, if we look at the Ethereum to Bitcoin chart here, paying close attention, we had two key patterns playing out right here. We had a very clear descending triangle, and then we had also a channel that we were operating inside of. So we're trying to see which one is most important or which one was going to play out. There's a couple of key things that took place here. One, we took out this high right here at 0.068. That was a key level, as that was our previous high. So once we had a low here, and then we had a high, and then we put in a higher low, that's good. And then when we take out that high right here, we now have a higher high. So that's essentially saying, okay, we might be entering into, a short term or long term, we just don't know yet, uptrend, because now we have a positively sloped lows, which is good, obviously. And then we have positively sloped highs as well, which once again is good. And, that's obviously the beginning of an uptrend. Now, where does that take us from here? We have to see. The next main thing that we're paying attention to is in confluence with that break right here, we broke out of our two patterns resistances, which was our channel and then also our triangle. So again, that's very good because now we have higher lows, we have higher highs, we have a breakout of our resistance right here, a consolidation, and then what we want to see happen is continuation. We started to get a little continuation, and then we start just retesting, and then we come back down and actually retest perfectly again. And now here we see the 8 and 21 are rolling over back to the downside. So can this still rally here and continue and Ethereum strengthen to Bitcoin? It 100% can. But it looks unlikely at this point in time. The next thing that we're paying attention to, what we really wanted to see break was this high right here. Because at this point in time, we have this key high and this key high. So this one was essentially good to break through, but this often ends up being an initial break and then throw over. So that's what we're paying attention to is, can we get up here? Can we break through this next high right here? And then that's going to line up obviously with the consolidation and continuation to the upside here. But we're now inside the bearish control zone. We now have the 821 crossing to the downside, and now we have lost the slope. We're below the slope line at the zero line, and we're seeing continual red histograms telling us that Ethereum is in fact weakening compared to Bitcoin. So it's not the end just yet, but it doesn't look great. Doesn't look great for it. What does that mean? It means that Bitcoin is going to go up faster than Ethereum, or Ethereum is going to go down faster than Bitcoin, or Bitcoin's going to go sideways while Ethereum goes down, or Bitcoin's going to go up while Ethereum goes sideways. Any one of those scenarios can play out, but we're paying attention to how this chart lines up also with our regular charts as well. So we can actually use like the difference between what the two asset classes are showing us in relation to each other. And again, I like to do this with specifically Bitcoin and Ethereum because they're like the two obviously like top cryptos, and then the shit coins tend to just kind of follow around, but they'll basically do what Ethereum does, but exponentially more. So if we dump, shit coins get wrecked. If we pump, shit coins pump, exponentially better. And then sometimes Ethereum outperforms, sometimes Bitcoin performs, but almost always what we see is Bitcoin moves first and powerfully, Ethereum moves second and more powerfully, and then shitcoins move third and even more powerfully. So that's what we're paying attention to. And if you were in the trade group or you were watching my content around that time, you'll see that around the same time I was taking profits on my initial Bitcoin position because we had already crossed this 821 to the upside. I was moving a lot of those profits into shitcoins. So as I was taking profits out of Bitcoin, I entered a position on BAT around the 821 cross. So I ended up, with a very nice position on that. And, in many cases, better or, equal gains to Bitcoin, 67% on that one. And Polkadot and not Dash is a piece of shit. Dogecoin, Uniswap, Chainlink, XRP, bunch of just other random shitcoins. Solana, and then okay, so we'll just keep going on here. So basic attention token now has finally started closing above the 200 simple moving average. That's good. Bull slope to the upside. Again, that's good. Still underperforming in my opinion. I'd like to see us get up at least to $1, but it is going to be very difficult for us to get above that level. Polkadot next. Polkadot is underperforming much more as it still has not even closed above its 200 simple moving average. It did hit its resistance, which was our previous lows down here, and some key fib levels. So again, underperforming, sell by sell signal and a bunch of weakness. I do not like how this looks right now. Dash. Yeah, still has not put in a new cycle high. So it's still absolute garbage to me. It did have a nice move up here through this little cycle and is above the 200 exponential and simple. But as far as I'm concerned, this thing is all but dead. And then let's skip over to XRP because it's the same situation with XRP. XRP, as far as I'm concerned, needs to break above its previous all-time high. We need to see XRP bust through this all-time high and bust through its previous all-time high of like $3 and whatever cents. If it does not do that in this cycle, and this cycle ends, this 4-year cycle ends, as far as I'm concerned, XRP and all dreams are dead. Dash and all dreams are dead. Absolute trash if you can't do that. It is, however, very powerful since it got above its 200 simple and exponential, and it stayed strong. Even though it did get the cross down right here, it actually stayed relatively strong, especially if we look at like the weekly and stuff like that. It is showing quite a bit of weakness right now, but who knows where it's going to go from here. It is actually like recouping quite a bit of its losses from this previous little microcycle high. Dogecoin, again, got back up to our key level, had a nice little move right here. But as far as I'm concerned, for like, you know, the old Doge days of summer, the dog days, you know, Dogecoin did the same as everything else did. So that, to me, it makes Dogecoin a piece of shit because Dogecoin sucks. It has horrible fundamentals. And then on top of that, its technicals are just mediocre at best also. So that it has nothing going for it. I would much rather put my money into something with good fundamentals and good technicals than something that has shitty, horrible, terrible fundamentals and is a total trash coin, a meme stock, but also has mediocre fundamentals or technicals. So as far as I'm concerned, Doge is like striking out in comparison to some of these other cryptos. It did get up to a key level here. It did stay very strong in relation to the 200 exponential and simple, but it's very clearly rolling over and having an extreme difficulty at that 30-cent point, which is not good. But dogs are still better than cats. And if you don't like it, fight me. Uniswap, again, looks mediocre at best. Ran into some serious resistance at those previous lows from the run up. Did get a nice cross right here. Finally got above its 200 simple and is finding support on it multiple times. But it looks like it's starting to roll over and show some weakness. So again, while it still looks decent, as far as I'm concerned, does not look good. Chainlink, underperformer, could not get above its 200 simple. So again, very good performer and leading crypto into this cycle. Did very nice, had absolutely amazing gains. I mean, we were in this thing at like $2 frickin'. I think $1.65 was our initial entry. I mean, this thing just absolutely crushed it. But, you know, it's obviously lost its luster as it can't even get above its 200 simple. Matic, overall decent from the 821 cross back here, has had a nice performance right there. I don't have the same amount of, well, it's about the same. I don't have the 200 moving averages just because this is on Kraken. I'm not sure where it was at before this, and I really haven't bothered to look. Solana, again, extremely nice performance. We were talking about Solana back here. As soon as it broke through, obviously once you got the 821 cross back here, and then obviously the break of that previous high at $40, and since then it's almost doubled. But if you just took that same entry at the 821 cross confirmation, just to where we're at now, up over 130%, this thing has absolutely crushed it. It is showing some weakness right here. Could be a bullish reset. You know, could just be topping out. Either one is acceptable. Cardano, same thing. I don't like Cardano. I think it's total trash and can't stand Charles Hoskinson. But the fact of the matter is, you know, exactly what I said. You look like when we were back here, getting this cross and powerful move to the upside, it was an initial 75% move. And, you know, exactly what I said. As soon as we found support right here and it looked like we were going to go higher, I was expecting a new all-time high. And, you know, depending on where you entered in from the previous all-time high close, you know, it's still up another 25% since then. So, again, while I think Cardano is a total piece of shit and bum trash, you know, hey, the chart, still good. Still good. So, you know, and that's a key thing is separating, like, what you think of an actual fundamental versus a technical. Like, because I think fundamentally Cardano is a total piece of shit, but technically the chart was looking good. And that's what's so important is fundamentally I might not want to invest in something because it's total garbage and like Charles Hoskinson's a bum. But technically, will I trade it? I mean, I'm less likely to, but it doesn't mean if I don't see a good setup, I'm not going to take it. You know, something like MicroStrategy is the difference though, because, you know, that's, I just will not ever participate in that under any circumstances. Bitcoin dominance, it's still doing exactly what we spoke about. Basically, this is our weekly chart. Got rejected at 200 exponential and simple, got rejected a second time, and every time this has taken place, it came down, put in a low, and then put in a series of higher lows before moving to the upside. So that's what we want to see happen here. We want to see this come back down, put in a higher low, bottom out, and then roll back to the upside, and that's going to tell us the cycle has ended. If we see another breakdown on this and take out this low right here, that will make me extremely bullish on altcoins and this crypto rally, and will make me think that it's going to be like January 2018 all over again, where alts just go absolutely parabolic. Let's look at total market cap. Total market cap looks good. I honestly, a little unexplainable. I shouldn't say unexplainable, but definitely seeing some divergence here, as what we're seeing here is we're almost back at the previous all-time highs. The crypto market cap is higher now in proportion to like our main movers. So obviously the cryptos we looked at right now, crypto market cap has recovered a larger percentage of its loss than Bitcoin, a larger percentage of its loss than, almost all the shit coins we looked at. And then you have a couple random coins like Solana, Cardano, and maybe like Ethereum that have recovered, more than that loss. So as far as I'm concerned, crypto market cap is diverging from the actual crypto space. And what that tells me is the market cap is going up, but it's like less spread out. So again, that makes me think that we're looking at like a musical chairs type situation, where we're probably going to see a couple strong things and momentum trades benefit here, while we see a bunch of underperformers throughout the space. Again, we need to be careful here. We don't see a rejection. One of the most reliable indicators that you see on the TJD TDMACD is when price action, or when the histogram rather, is below the slope line. You would expect the slope line to be red. And then when it flips back over, but it's still below it, this is almost always a divergence signal and ends in a rejection. So what I mean by that is, if this would have stayed red and then we burst through it and then it flips back over blue, that's fine. That's what we want to see in a strong trend after like a bullish reset. But when this flips over blue and we're still below it, when we come up to it, we almost always get a violent rejection and never see that same level again. So to me, that's something definitely worth paying attention to on the weekly crypto market cap. So Riot Blockchain, again, just got a massive rejection at that same level and just cannot get through it. So this is, again, my point about I would rather have Bitcoin. Riot Blockchain has been extremely, extremely weak in comparison to Bitcoin. It sold off violently down here and then has been unable to break back through these levels. And while Bitcoin was regularly putting in new highs on the trend back up, Riot has basically just gotten stopped every time at that same level, which is weakness. So you'd rather have Bitcoin, obviously. MicroStrategy, again, got rejected quite a few times here, but put in a series of higher lows, and now is actually moving to the upside. We are seeing a little bit of weakness, a little more weakness up here at the top, but I think part of that just has to do with the fact that this is not trading on the weekends, and typically we're seeing like bigger moves, bullish moves on Bitcoin over the weekend, as the markets are a little thinner and it's easier to move price action. So we'll see here. Michael Saylor is obviously a bitch, so. Coinbase next. Again, same thing. I'd rather just be in Bitcoin. This is basically just trading along with crypto. So if I have the option between, investing in Coinbase and them like not ever returning people's phone calls, having down like exchange during like key times of trading, and then making all their money off of trading percentages, I would much rather just be in the underlying asset. So as far as I'm concerned, things like, MicroStrategy, Coinbase, Robinhood, like none of those things are worth being invested in right now. Now, if the charts actually start looking more bullish and they start to like overperform, that may change. But as far as I'm concerned, if I'm going to trade Robinhood, I might as well just trade a meme stock and buy like AMC or something else. If I'm going to trade, Coinbase, I might as well just buy Bitcoin or Ethereum or some shitcoin. And then if I'm going to buy MicroStrategy, I might as well just put a barrel in my mouth and pull the trigger. So Robinhood, obviously very weak right here. And when I say very weak right here, I mean in relation to meme stocks, because this is very clearly just trading as a meme stock. and it looks absolutely pathetic. I mean, I had a nice run up after the initial IPO, and it memed it up and everything. Came back down here, found some support at a key level, but during meme stock mania these last couple of days, this thing barely moved. So again, underperformer. So next, let's talk about GameStop. Again, I'm not a big fan of GameStop. I think the business is total shit, but boy, did I call this move. Literally said that I expected this thing to burst to the upside, and of course it did. Bursted to the upside. I think it was over 25%. Yeah, I mean, from, you know, beginning of the candle to the end of the candle, and then even the push up the day later, over 35%. Where did it stop at? Well, it stopped at a key Fibonacci level, and again, you know, touched the level that we were expecting to hit almost perfectly, but was unable to break above it. Dear God. Okay, there we go. So it got rejected here at the 1.382. The previous push up, the double top right here, was at the 1.5, and then the initial top up was at the 1.618. Let me fix this so that doesn't happen every time in the future. And the reason that's so important is, well, these are our Fibonacci extension levels from our previous all-time high. So if we go back over, way back in time, at one point in time, GameStop, piece of shit, back in 2000 and like roughly 7, the all-time high was like $62. So if we do the Fibonacci extensions from that $62 all-time high, that gives us a Fibonacci extension of 1.618 exactly to the top right here. And then we retrace back down to the 886, find some support or the 0.5 of the move up, and then we get rejected here on a wick at the 1.5, rejected here again at the wick at the 1.5, find support both times at the 1.236, come back down, touch the 1.236 again. That was our entrance point right here for where we thought it was going to retrace to, and then again push up exactly to 1.382. Looks like we're getting a clear rejection. So here we have a high, a series of lower highs, and then again a third lower high. So at this point in time, we would expect a breakdown to the downside. Could we chop around here and do some other stuff in the meantime? For sure. But this move is done as far as I'm concerned. We can also see a very powerful knife stab right here, and that's almost always a topping pattern. But we are starting to pick up a little bit of momentum on GameStop. And then AMC, same exact situation, little bit different. Came down here to the bottom of the channel, broke through essentially what amounted to our descending triangle. We did what we were talking about with the Ethereum Bitcoin chart. We took out that previous micro high right here, which is good and shows strength. And if we can maintain above this area and then see, you know, consolidation or continuation, the next key level we're paying attention to is like $61. Do I think it goes there? No, I don't. I think this thing's going to roll back over and die. But we did cross 821 to the upside. We are getting multiple green histograms crossing over the slope line here. Hard buy signal. I mean, could have easily traded this. Obviously, I do not. But that is just because I don't like or trust meme stocks. Bed Bath & Beyond, same exact situation. We got the perfect bounce off the 200 exponential and simple. Did not get much follow through. Honestly, I was expecting this thing to burst up a little higher. 12% though, not bad in a couple days. I do expect this eventually to do one of two things. Either come back down here and touch the bottom level, or if we can start taking out these previous little highs right here, potentially get all the way back up to the top of the triangle at like $38, which would be a very nice move, obviously. Newegg, got the exact move we talked about, bounced our green support perfectly, came back up here, got rejected at the top of the blue, came all the way back down to the bottom. So again, I expect this to just trade sideways, but eventually it will break. And when it does, I expect it to touch the 200 exponential or all the way just take out this bottom candle here. So, you know, essentially back down at the bottom of the range. I expect a 25% to a 37% sell off at some point in time. But this thing, again, has been trading very technically along the way. Little less desirable, I think, amongst the meme stalkers. The DraftKings next. Nice powerful move to the upside. Once we broke through that key resistance right here in the 0.5 as well, took out that previous little micro high right there, and now we're retesting the one before that. Burst through the 618. Tell you the truth, I was not expecting this to burst out, but we did have that triangle in place in case it did. Looks pretty bullish overall. Definitely about to cross the Stochs back to the upside. Pretty powerful knife there. So is it possible it topped out and is going to sell back off? Definitely is. But as far as I'm concerned for now, momentum is definitely on its side. You know, it's crazy too, because it seems like Cathie Wood always gets like one little like Nice, powerful move to the upside, and yet somehow her funds just never are winning. Never winning. Crown Castle. This was one that someone asked me to look at. It did exactly what we talked about. Came back up, filled the gap, and then just started bleeding out. And now we have what amounts to 3 black crows, 3 big, thick red candles in a row, and then taking out the low right here. That is always bad. Even though we could get like a temporary pushback up to resistance, that is almost always followed by like extreme selling. In the same way that if this was 3 green candles to the upside, taking out a key resistance level, it would be very bullish, obviously, as well. And it would be 3 white soldiers would be the name of that. Or I guess 3 gray soldiers, so that I don't hurt anyone's feelings by using the term white, because I know that's not acceptable. So that is Crown Castle International. And then finally, just another random one that was asked to look at, the Applied Materials again, AMAT, came back up, basically seeing that resistance act as resistance as you would expect it to. Key level, we really need to get back above that 2.0. If we do not, I expect it to come back down to 200 exponential and simple. If we do, as far as I'm concerned, we're basically looking to come back up to the top of the range, which is going to be like 146. So, but we're starting to put in, basically a pretty clear, like, ascending triangle pattern here. We have a couple tops here, and then we have obviously like higher lows on the bottom. So in the event that we can break through this, our target to the upside would essentially, our target to the upside would basically be probably that 2.618. Again, probability says this is a bullish pattern. So, that's more likely to happen. 66% chance that if we start retesting these highs, we potentially get that breakout. So, and that would take us, the measure move up to like 176, and then the 2.618 would take us up to 200. So definitely looking like there's some possibility. Gaining some strength coming out of the bearish control zone off of key support with multiple green histograms in a row. Looks like it wants to cross that 821 back to the upside. I think there's definitely at least potential that this thing gets continuation back to the top of the range, which again is like an over 10% move. But is there a decent trade setup here? Probably not, because you're looking at basically a target to the breakdown of the 200 moving average. So if you were going to take a trade setup on something like this from the level it's at right now, what you would want to do is, in my opinion, what I would do is I would take a long to potentially the top of the range with a second target for the breakout, and then I would have a stop loss below the previous lows of these 2 touches right here. So if we broke down below those lows, we would break out of our support triangle and then essentially probably be headed to the 200 moving average. And then if we break up from here, we would have obviously 10% to the top of the range, at which point in time I would want to take profits, which is going to give you about a 1.77 risk reward, which is not enough for me. I like to have at least 2 to 1. So if it comes back down here, retest the bottom and starts to show strength, there's definitely a trade setup there. But as far as I'm concerned, anything less than 2 to 1 risk reward is just not worth it. There's always better trade out there if that's your risk reward, in my opinion, obviously. Yeah, so that's our cryptos for today. I'm going to take a quick drink and let me holler at you in the chat there. What's up, Ty? Good to see you, brother. How often does a 3-drive bearish divergence on the daily not play out? How often does it not play out? Well, I guess the opposite of how often it does play out, and it plays out probably like 75% of the time, bullish divergence and bearish divergence with a 3rd drive on a daily chart. If you go to a shorter time frame, it has a less likelihood of playing out, and the moves are less percentage-wise. And then obviously on a longer time frame, like a daily, it has a high percentage chance of playing out, and then it also has high moves. And then if you're on like a weekly or a monthly, it takes a long time to play out, but when it plays out, it typically leads to like a very long, extended, powerful trend move, like in that direction. So I would say probably, like, depending on your asset class and everything, I would say a triple drive of bearish divergence or bullish divergence on a daily chart, you're looking at like 75% probability. Even if you want to be like conservative, you say 66% chance of probability on the 3rd drive. That's fucking amazing, in my opinion, because the move that you get after that is not going to be some puny little 3%, 5%, 10%. The move you get is going to be 30s, 40s, 50s, hundreds of percents. Like in the case of that bullish divergence that just played out on some of our shit coins, we saw 200% and 300% moves. But obviously, you know, something like a 50% move is fucking amazing. I mean, I don't care who you are. So yeah, that's our crypto. Our Kits, good to see you, brother. Another great stream. Hey, thank you, my man. Good to see you. Good to see you. Yeah, let me take a little drink here and then we'll keep ripping through. You know what? Actually, before I took a couple notes of a couple things I wanted to discuss, as obviously we have a big deal coming up with this Fed Jackson Hole meeting coming up. So I want to talk a little bit about that. Okay, so here's what we're looking at. Typically, this meeting, August, September, is typically volatile and not great for stock markets. Crypto, August is usually a very good month. In my opinion. I mean, statistically, you can go back, argue whatever you want, but we saw a bunch of like the final lows for market cycles in August, and we've seen like powerful gains, like many years in a row in August. So for me, August is a good month in crypto. Typically in markets though, August, September, not the best, as it's like the end of summer, kids going back to school, etc., etc. A lot of people, hedge funds, everything, taking profits towards the end of the year and locking in those gains and playing a little more passively as we get towards like the end of the quarter. As far as the Fed, Jerome Powell, in my opinion, will literally do nothing. My opinion is he will, at the Jackson Hole meeting, which now is going to be virtual, which every other meeting's been virtual, not a big deal. But now, in my opinion, he has a whole nother excuse with Delta to basically just be like, oh, we're afraid because we don't know what's going to happen with the economy with Delta. We still have a lot of women unemployed. And once people are back in school and we don't know if the schools are going to be open and we don't know if the women are going to go back to work. And we got a lot of blacks and Hispanics that aren't employed. And there's inequity and inequality and racial and sex. And oh no, we're scared. I think Jerome Powell is going to get up there and he's going to blabber his mouth and nothing's going to come out. He's going to speak super vague. He's going to read off of a teleprompter or a piece of paper or whatever, and he's going to come off as a pussyfooting little clown that he is. That's my opinion. As far as, and that's about doing nothing. Okay, so I'm talking about tapering. I think he's not even going to announce a taper. I don't even think he's going to announce that they're going to taper before the year ends. Matter of fact, I would go as far as to saying I do not think any tapering will take place this year. I think that they will start tapering in January of next year. And I think what they will do is, in my opinion, and this is just my opinion, I think that they will come out and say, we're going to taper our asset purchases by, you ready, drum roll? By, let's say, they're doing roughly 120 billion per month right now. I think they're going to say, we're going to taper 10 billion per month for the next 12 months, or we're going to taper like 15 billion per month for the next, whatever it works out to, like 8 months or something like that. That's my opinion. That's what I think they're going to do. So if we just, for simplicity's sake, say they're going to taper 10 billion every month, what does that mean? Well, it means during the tapering process, which would essentially play out over a 12-month period. So it would be all of 2022, they would be tapering. During that period, they would still be like the first month, instead of buying 120 billion in January, they would buy 110 billion, then 100 billion in February, then 90 billion in March, then 80 billion in April, and just go down the line. So that would mean that by the time the 12-month tapering process is complete, or 11 months, whatever, and they taper down, they will have still purchased another $660 billion of mortgage-backed securities and bonds. That's my opinion. I could be completely wrong. Maybe he'll just come out and be like, in December, we're selling 120 billion in bonds and raising interest rates. But I would bet anything in this world that that will never happen. So that's my opinion. There will be no rate raises whatsoever. There will be no announcements of rate raises. He will even come on and say, we're not going to raise rates because I'm a pussy-footed little bitch. That's what he'll say in his many words. but I don't even think they're going to announce at this point in time a taper. So remember, we have 3 levels. We have tapering as level 1. Then we have selling. So the tapering just means they're buying shit, but they're buying less shit. Then we have selling, which means they're actually decreasing the Fed's balance sheet. And then we have raised rates. And I don't think they're going to do any of those this year. And I think that they basically have all but said they're not going to sell anything until they've tapered completely. So if I'm right about how long it's going to take them to taper, they will taper in 2022. They will sell and decrease the balance sheet in 2023. And then maybe in 2024, they will raise rates. Why I think they will never raise rates is Jerome Powell is a little bitch. Think about it. He literally got appointed by Trump to the Federal Reserve. And in 2019, he said, we're going to go robot style and we're going to raise rates by 0.5% per, what was it, like every month or every couple months or whatever. And that was at the end of 2019. We saw the rates had reached 2.5% through like his series of rate hikes, which was basically from 0 or 0.5% up to 2.5%. So he had 3 or 4 rate hikes at the end of 2019 and literally crashed the markets. I mean, you could say, oh no, it wasn't that. It had nothing to do with that. It was COVID. But if you looked at transportation sector, if you looked at semiconductors, if you watched my fucking videos, at the time, my channel was brand new and I literally came on and called the crash was going to happen before it happened. How did I do it? By those 3 things: Jerome Powell raising rates, semiconductor leading indicator, and transportation sector. So that was before anybody knew about CVD and the shutdowns and all that shit. In my opinion, all bullshit. All bullshit. I'm not saying it's not real or whatever, but for me, it was an excuse for Jerome Powell to wipe back all those rates and for them to bail out the stock market. You know, and you could argue that there was, you know, they were doing it to get rid of Trump. You could argue whatever you want. I don't give a shit about any of that. I'm saying technically, as far as the markets are concerned and making money, that's exactly what happened. So do I think now all of a sudden Jerome Powell is going to grow a set and have some balls and actually raise rates? Fuck no. Fuck no. And if he does, it will be in 2024. And tapering will not happen in 2021. It will take place throughout 2022, and it will be a long, drawn-out process. And if anything goes wrong, he will tuck it between his legs, and then he will run back and back up whatever he did to fuck it up, because Jerome Powell is a little bitch. Now, in the event that for some reason Biden and the woke squad pull Powell out of office and put somebody else in there, maybe things change. But as far as I'm concerned, you know what? They are pretty fucking stupid, and they do mess up literally everything. So it is possible that they would be so dumb that they would pull Jerome Powell out in the middle of him, like basically like, you know, saving quote unquote the economy or propping it up, whatever you want to call it. But yeah, that's my Jerome Powell take and what's going to happen. What does that mean for the markets? Well, melt up continues, most likely. Melt up continues. I guess we can kind of talk a little bit of like other notes that I have here as far as what I think is going to take place. Like the title of the video and everything before we take our little break. And then we'll jump into our other assets. In my opinion, the future is not going to be good. The reason I say that is because multiple expansion is over. This entire year, this entire run-up since the crash has been multiple expansion, okay? Most of these companies were not doing better along the way. They were just having a higher multiple. And what do I mean by that? I mean either price to earnings or price to sales. So the gains that you saw in these companies were gains in their valuation based on price to earnings or price to sales. And the reason I use those 2 numbers is, well, price to earnings got so ridiculous on some things that they started calculating price to sales, and price to sales is also required in some cases because a lot of these companies with ridiculous valuations don't actually have any earnings because they've never made any money. So in all reality, those 2 ratios are extremely important and typically, traditionally, how you value the stock market. So in my opinion, if you look at our multiple expansion that took place throughout this like last year plus, what really happened? Well, earnings like pretty much stayed the same or got slightly better because of bailouts and free money just being like helicopter money all over the place. But in all reality, none of these companies got better. There was a couple companies in a couple sectors that got better. Most companies are way shittier than they were before and definitely worse off and probably always going to be. But their price to earnings, their valuations have gone through the roof. So that's a multiple expansion. Well, that's done now. Why is that done? Well, because we basically have pulled all of that from the future. We have borrowed all of this spending from the future. We have borrowed prosperity in the form of debt from the future. So we have like record levels of debt. We have pumped forward, as far as like GDP ratio, like debt to GDP ratio, what is that basically? That's basically the government saying, hey, in order to keep hard times from coming now, we're just going to enslave all your children in the future because they're going to owe back like hundreds and hundreds of $1,000s, which if you take into account like the time value of money, if you have a kid now, let's say you had a kid during COVID lockdowns, by the time your kid is 21 and you figure, without any additional spending, I think on average, the average taxpayer owes like $125,000 or something like that in the United States to pay off our debt. So by the time your kid is 21 years old, your kid owes $1 million, like with time value of money and extrapolation of debt and everything. So your kid's a debt slave. So they're like, hey, look, we'll give all you baby makers out there $300 every month to just make as many debt slaves as you can. And then we're going to just tack that onto the debt. So you better be able to turn that $300 a month that we're giving you into $1 million by the time your kid's 21, or you just made us a slave. Because that's how I look at it. So as far as I'm concerned, keep pumping out debt slaves because somebody's got to pay for this. As far as, earnings determining price in these stocks, I mean, what makes me think that we're not going to have an expansion? Well, easy money. I mean, interest rates make it easier for people to put money into things. They don't have to make as much return. Therefore, they can pump up price to earnings ratios on things, invest in companies with poor price to earning ratios. They can buy houses, they can do all this stuff, dumb stuff with money, take extra risk because they don't have to earn as much return because money is so cheap. It's basically free. So they basically have to earn nothing just to stay even. And if they earn anything at all, they get ahead. So that's going to pump up, the price to earnings ratio. Also, PPI is coming in. If it costs companies more money to make stuff, things are going to be more expensive in the future. So that's going to cut into their bottom lines. So if you sell things for the same price and then it costs you more to make them, your, price of your stock compared to your earnings is going to go down unless you also sell more items or raise the prices. So that's going to lead us to our next form of basically, why we're never going to see multiple expansion again, or at least not anytime soon, which is taxes. So, here in the United States, we have the inflation tax, which is taking place right now. No matter what you want to argue, whether it's transitory or not, obviously if PPI goes up, obviously that's going to get passed on to the consumer. So everything goes up by a little bit. Housing goes up by a little bit. The CPI goes up by a little bit because the PPI went up and they passed that on. Everything starts to go up just a little bit. So there you have inflation. So now it's going to make it even harder for companies to actually earn more money. Therefore, their ratio is not going to go up unless they raise prices by more than the amount that they, make extra by, or there's extra demand. Well, how's there going to be extra demand? Well, there has to be more people. More people have to buy more stuff. So if things are more expensive, that's deflationary because less people can buy that stuff. And then if there's less people because people aren't reproducing because it's expensive, or just overall because the world outlook doesn't look particularly great, which is happening all over the world, you end up with less people. So then there's nobody, no new people coming in. So if we can't make new debt, we can't make new people, we can't create more demand because everything costs more money, those are all deflationary. So that's going to all hurt. Bottom line, on top of that, we have the Dems want to raise personal income to pay for all this expenditure. Capital gains tax is going to go up. Corporate tax is going to go up. So now you have less people willing to do business, making less money off of business. And then people, capital gains, they're less likely to invest because they're going to make less money investing. So all those things are deflationary. Then you have obviously birth rate on the decline like we discussed. Your GDP deceleration, even if you argue that our GDP is going to go up and we have this stellar year of GDP because we're counting all the government spending into the GDP numbers, are we actually producing more goods Or are we just pretending to produce more goods by pumping out more government money? Well, I'd say it's the latter of the two, and it's actually a fact. So that's obviously going to decelerate GDP in the future. So the idea of GDP is if it's going up, everybody has a better, form of life, a better, living, because the country is doing better, making more goods, selling more services, or providing more services. Therefore, everyone's doing better. It lifts up the people on the bottom, and then arguably you get some Jeff Bezoses and some Bill Gates along the way. That's fine, but overall, everyone's doing better. Well, if the GDP starts to stagnate, what does that end up? There's our stagflation now. So we have inflation taking place clearly, on like the micro scale inside of things, housing, all kind of other stuff, whatever. Food, everybody's complaining about food. Well, because everything's getting more expensive because we're not making anything. And then because we're not making anything, we have to buy everything from somewhere else. So then transportation costs get more expensive. And then we made oil more expensive because now we're not making oil anymore because we're wokeicized. So we're all trying to be like little woke good people like soy boys. But instead, all we're doing is just making everything more expensive. And we're going to create larger and larger wealth gaps. So all those things. And then on top of that, you have, what are companies doing right now? Well, are companies reinvesting in new stuff to make things more efficient and better so that they can get like lower prices of products, so they can sell more products, so that they can get bigger, so that everyone can do better, so they can pay more taxes? No, the opposite is taking place. They're not investing in anything. We haven't literally invested in anything in the United States for like 30 years. All we do is buybacks. So what is a buyback as opposed to an investment? Well, a good company, as it's growing and it's expanding, it continues to grow and expand. So instead of, basically just taking that money and putting it in a bank, it reinvests it into the company and buys more factories or more machines or more goods or whatever the situation is, a bigger warehouse or more employees, and then they grow the company, and then it's better for GDP over time. But doing things like, buybacks, what does a buyback help? It helps only shareholders, which is typically like the people who have an incentive based on the price of a stock, or the people that are like, involved in the company that have like a share in the company, obviously, or people that trade or buy stocks like publicly. So what does that really do? The company doesn't get any better, and then the actual PE ratio goes down, so there's less stock available to the market, which is good for the price of the stock because it's alternate with demand. Having less supply is the equivalent to having more demand. So therefore, price will go up with either one of those factors taking place. So buybacks makes the price of the stock go up. Hooray, everybody wins. But what does it do? It widens the wealth gap because most people, especially the poor people that all this stuff's supposed to help, don't own stocks. They don't own businesses. They don't own houses. They don't own all this stuff. So the gap just gets bigger and bigger. And then meanwhile, nothing gets cheaper. Everything just gets more expensive. We don't have better companies. These companies don't pay more taxes because they're just buying back their own stock. They're not making new stuff. They're not building new warehouses. They're not helping the GDP out. So again, deflationary. On top of that, where is all this money coming from? Well, it's all being funded through taxes and, silent tax through inflation. So we have basically like borrowed from prosperity, like borrowed from the future. That's essentially what all this debt is. Like, what's the difference? Well, if you don't have debt, you just go out to your job, you earn money, and then you spend that money. But if you're going to take on debt, what are you doing? You're saying, well, look, I'll just consume less in the future, but if you let me have it now, I'll be better off, and then I'll just pay you back in the future. But that's actually like the worst thing you can do, unless you're investing that money in a good way to make more money. Obviously, if you're going to take out a loan from the bank and then you're going to go buy, machine to make more stuff with, that's great. That's a good kind of investment. That's debt that is backed up by assets, which is good. But if you're just taking on debt to consume, which is what the United States is doing right now, we're just giving out all this money and creating inflation and creating debt to consume just to get by, just to stop a crash, just to stop a reset, to stop that burn of all the shit companies and all the shit people, because we're just bailing everybody out. Well, what is that? That's the bad kind of debt, because we have nothing to show for it. We just spent that on stuff and things and services, and then when it's all said and done, we owe the money and we have nothing to show for it. We don't have a machine. We don't have increased productivity. We don't have a better economy. No, we don't have shit. So, again, horrible and deflationary, because we're borrowing from the future to use now. We're borrowing it from the future to consume now. And then in the future, we won't have that extra consumption. And then also we have a bunch of debt on top of it, plus interest and everything. So once again, we're back to the slave population. You know, not all of us. A lot of us will be fine. If you're listening, you'll probably be fine. But if you're one of the other poor plebs out there, one of these, you know, poor people, that the victims of society, you're just getting victimized, and they're just telling you, oh no, we're going to make it better, while they crack the whip and slap it and tell you, oh no, we'll help you have more kids. We know it's unaffordable, but, and then you don't realize that you're actually just making more slaves and you're living on a plantation. But hey, that's all good. And then finally, we have just the crazy levels of margin taking place in the markets that is pumping up the prices on everything right now. These markets right now are fueled by record levels of option trading and margin. We have massive amount of calls taking place in the stock market. Matter of fact, a larger percentage of options trading and huge percentage of calls taking place are literally what's driving these markets forward, because people are just leveraging up, leveraging up, leveraging up. So the same way that like a recession or depression is good for the economy because it burns away like all the brush and allows like the forest over time to thrive, or a field to thrive and new crops to be like birthed out of it. We're doing the same thing with the markets right now. We're not allowing that burn to happen. We're not allowing any pullbacks. We're not allowing those margin resets, or, you know, those calls to get wiped out, that leverage, that you know, exponential in the system. So what's happening is we're just piling up margin debt, margin debt, margin debt, piling up the leverage. And then eventually when we do get the pullback, it leads to a crash, because it liquidates all these people, because they're only levering up more and more and more. It's like, oh, Bitcoin's up, so I'm going to borrow against my Bitcoin. Oh, my borrowed money that I invested in Ethereum's up too, so I'm going to borrow against that Ethereum, and then I'm going to buy shitcoins with it. Oh, my shitcoins are up too, so I'm going to stake them, and then I'm going to get more shitcoins, and then I'm going to borrow against my Bitcoin again because that value went up, and then I'm going to buy more shitcoins. Well, that's all the stock market is right now, and it's just a gigantic pyramid scheme built on sand, and eventually it's going to crash down, and one day we're going to get some kind of decline, and it's going to wipe out massive amounts of margin. And then one day, probably never, but someday maybe, money won't be as cheap anymore. So then it's going to be more expensive to borrow money. Therefore, you know, again, we'll see less of that money borrowed from the future, because people will need to make gains to pay back that money. So again, all these things are just going to lead to a massive crash and deflationary cycle. So as far as I'm concerned, the future looks shitty right now. And that's where I get the title for this video from it. And you know what? If you're here right now listening and you're still listening, you're probably going to be one of the people who's doing extremely well in the future. Because when everybody else is getting wiped out and they're getting their little metal collars around their necks and their chains are getting locked up and they're becoming slaves, we're going to be the ones that have taken care of our families. And we saw all this coming, and we're going to be financially doing well. And I mean, metaphorically speaking, obviously I don't think people are going to get metal collars around their necks in most countries. But yeah, that's basically my little rant for today. I wanted to talk about a couple of those key things, especially like going into Jackson Hole and everything, what to expect, what the markets are going to do, etc. Let's touch real quick on the 10-year, and we can... And then we'll take a break. Yeah, we'll talk about the 10-year and everything real quick. So obviously seeing a nice little push up on the 10-year yields, up now to 1.34%, back above the 200 exponential and simple moving average. We now have a positive slope on the 200 exponential again. We did have that take place right here, but didn't really like go anywhere. Sold back off, but put in a higher low. So this is starting to really look like a double bottom, especially with our bullish divergence that we saw take place. And then now we're back above the 200 exponential and simple and starting to curve back to the upside. What we're paying attention to obviously is when we take out this high right here, and then obviously our key level would be the 618 to pay attention to. In the event that we bust up through that at 1.45, the next level we're paying attention to is like that 1.62 level up in that area. I'm not ruling out the possibility of a big sell-off right here, and probably any raise in this, especially if it's powerful, as we've just now gotten like the 821 cross. We have the blue slope line. We have multiple green histograms. We're above the zero. We're curving back up on the stochastics. Any move back upside on this, the more violent it is to the upside, the more horrible it's going to be for the market. So if these rates start to shoot up, keep in mind also that when Powell dumped the rates back in 2019, when the markets crashed and we had the CVD scare and he dropped them from 2.5% to 0, that he had 2.5% to deal with. on the Fed funds rate. Okay, right now we're still at 0. So if we start to see any kind of turn down, they say, oh, we've got ammunition, we're going to do this and we're going to do that. Well, they don't have anything. They don't have anything. There's nowhere to go. They cannot lower rates when they're already at 0. So if they would have been slowly hiking the rates back up along the way, even just a little bit, we would at least have a little leeway so he could cut rates 0.5% or 1% or whatever. But if shit hits the fan now, there's nowhere to go. There's nowhere to hide. Nowhere to go. Nowhere to hide. So, and then obviously we're seeing on the TLT the same thing happening, but in reverse. 20-year Treasury broke down from that key level, still above the 200 exponential and simple, but in my opinion, this looks to me like an attempt to try to save the trend right here, and typically gets rejected and falls over. Maybe it does move back up to the upside here and we hit our 0.5 target, but it is definitely showing some weakness here. We got to just pay attention to what's taking place, as this is essentially putting in a series of lower highs and potentially lower lows as well. So we could easily pull back to a lower level at like 143 or so. This is going to, obviously, as the bond market starts to sell off, if it starts to sell off, and the rates start going up, that's going to put a lot of pressure on a lot of assets, including the stock market as well. So let's take a quick break, and then we'll jump in with the DXY, and we'll run through our other asset classes as well. Appreciate everybody for being here. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. I will be back in like 2 minutes. Please enjoy your break. Make that popcorn, get that drink, and stick around. All right, let's keep ripping through here. And I would like to remind you also, this is not financial advice. I'm not your financial advisor. Markets are extremely volatile. Please do your own research. Trade responsibly. So let's take a look at the DXY and see what we got going on over here. So obviously, we have a little bit of a pullback right here. Everybody's getting excited. Oh, the Dixie's crashing. It's over. I knew it. It's going to 0. Yeah, probably not. We have rolled over the 200 exponential and 200 simple to the upside. Keep in mind that is the first time this took place since May of 2020. And since that has happened, we're well above both those moving averages. They both have a positive slope, and we still have the 821 cross to the upside. We are just hanging on to the 21 at this point in time. But what actually I expect to see here, I do expect the DXY to come back down to like the 92.1 range. Possibly as low as the 91.3 range. If we start to come down here to revisit the low lows, is when I will get worried for this thing. But I do expect at least a short-term pullback, as we do have the hard sell signal now. We talk about this all the time when we're below the slope line and we come up to it. we often get rejected off that slope line and sell off. Now here we have multiple red histograms in a row. We have flipped the slope line over red, and we have the hard sell signal. We're about to cross the 821 to the downside, so I do expect a micro pullback within our macro uptrend. We do have if we turn on our drawing tools, we have a very clear support line right here from our bottom. Here we have it as well. Here we sort of bounced ahead of time, and then here we're back at it again. So if this breaks, I would expect it, if it breaks to the downside, I would expect a violent move immediately, almost down to 92, if not back down here to like the 91.35. Now that would be good for like gold and silver, and would definitely like platinum, give some of them like a relief rally. Definitely would be nice for some of those other asset classes. Does it have to happen? No. But the key levels I'm looking at are basically that previous top of our channel from before here that we have that's forming like this ascending wedge. And then our bottom support line, which is essentially just the bottom of our our atom from our Adam and Eve pattern. So paying close attention to that. I don't think it's detrimental if we just break down from here. I also don't think it's unrealistic that we could break up to the upside and just shoot up here. Eventually, I do expect that move to the upside, but I don't expect the dollar to just all of a sudden shoot up overnight. I think consolidating at this range, coming back down, putting in another low, and then eventually rolling this over is more likely. We'll see like this type of situation happen a lot, where we just bounce up and down multiple times. This thing moves very slowly and almost always moves in like very clear ups and downs and just makes little gains along the way as it goes. But remember, you know, when we had this situation where it crossed to the upside, we have a nice move up, we come back down, find support, nice move up, come back down, find support, and then same thing from back here. Once we cross them to the upside, you know, we have a series of ups and downs. I don't just expect this thing to just shoot up all of a sudden. Is it possible? Yes. And then if we look at our longer time frames real quick, we'll notice, like, I'm going to turn off the drawing tools again. We'll notice on the weekly here, again, very bullish overall. We are still below the 200 exponential and simple. So I would expect them to act as resistance if we come up to them. But we have crossed 821 to the upside on the weekly. We have the hard buy signal. We're now inside the bullish control zone and still angled both Stokes to the upside. And then obviously all green histograms above the zero line and blue slope line on the TJD TDMACD. So everything but the 200 exponential and simple are bullish. And we're actually, they're almost flat at this point in time. So if we come back up to them and consolidate, they would easily flip back over blue. So again, we got to pay attention to that, but we have many, many things telling us bullish. And then here on the monthly DXY, obviously very, very bullish. We have the hard buy signal coming out of the bearish control zone. That's extremely bullish. We have multiple green histograms. We're still below the slope line, still below the zero line. So there's definitely some moves to be put on there. But we have rolled over the 200 exponential blue. We have rolled over the 200 simple blue. We're above both those moving averages. We're above the 8 in between the 21. So a consolidation in this range before a burst to the upside is not unrealistic. Also not unrealistic to think we could get a push down as low as like 91. So right now I expect us to operate within the 92 to 93.35 range. But it's easily could come back down to like 91 or something like that on the monthly. But eventually I do think this is going to get a powerful move to the upside once we break through that level at 93.25. So but again, very, very bullish in my opinion. And again, if we look back at this dollar chart, this is a signature we've never seen before and has been playing out since the initial cross of the 200 exponential back in 2014. So technically, we have been bullish on the dollar on the monthly since 2014. Or you could argue once we got above the 200 simple. But again, January 2015. So anyone that's bearish on the dollar right now is long term is probably a fundamental person or just an absolute fucking moron. But if you're a technical person and you look at moving averages, higher lows, divergences, indicators, oscillators, and you look at a monthly chart, you should be bullish on the dollar. If you're not, please, please let me know why with a legitimate argument, because I would love to hear it. Because there's nothing technically I see that's bearish on the dollar. Let's look at the VIX here. So VIX did exactly what we expected. Got that amazing burst to the upside. Got completely rejected. And now here we are back down at the bottom. I do expect this to sell back off, potentially down to the bottom of the range. And I will be looking for another entry. This thing just literally does the same thing over and over again. Volatility dies, explodes to the upside. Markets crash for a second. And by crash, I mean lose 1% and everyone loses their minds. Still the same thing. We are still in the neutral zone as far as I'm concerned. We have the neutral of the gigantic channel. We have the neutral of the descending channel. And then here way down at the bottom at like 10.5, or here way up at the top at like 44.5 is when I'm actually paying attention to like massive levels and crazy moves happening. But anything in between, this just looks chill to me. If we get back down here to like 14, I'll pay attention. If we get up here to like 20, I'll look for a rejection. US oil next. So we got the exact move we discussed on oil off the 200 exponential. It has just, shot straight back up. The initial move we were expecting was back to 66.36 to resistance. We burst through resistance, no problem at all. Back on top of the 8 and 21. Looks like it wants to consolidate here for a little bit and then move back higher. If we consolidate here for any amount of time, I would expect this to push back up to 76. And it should be at 80 very soon. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. Yeah, crude looks powerful. And I know everybody's calling crude's going to crash. Kathy Wood's like, it's going to be $3. Shut up. Dow Jones still looks strong. Back up here, retesting all-time highs. Bullish consolidation. Not selling off. Saving the slope line. No reason to get bearish on this thing until at least we break through this ascending trend line. S&P, new all-time highs on the monthly here. Let me switch to the daily. Again, looks like it basically broke down. It's trying to reclaim that slope line now. Back up at resistance, which was support previously. I think it reclaims this level. If it doesn't, we'll really have to start paying attention. But as far as I'm concerned, no reason to get bearish on this thing until it gives us one. And there's no reason at this point in time. Could that change on Friday or even Thursday? Sure, but I doubt it. NASDAQ just melting up, melting to the upside. Looks phenomenal. Couldn't literally ask for a better move. Still well on its way to hitting our target up here. Obviously, target being that 15,700 range. Everybody's saying, we hit 15,000, it's going to pull back. NASDAQ doesn't fucking care. It'll pull back when it wants to, not when you tell it to. Russell, the old ruddy. Oh, look. Oh, big fucking surprise. The Russell bounced the same trend line that it bounced every other time, which just so happened to line up perfectly with the 200 exponential and simple moving average. Oh my God, who'd have thought it? I thought for sure this was going to be the one time when it broke. No, probably just going to trade inside the same range for till the end of time or until it breaks. But either time ends or this channel breaks, but probably just trade sideways for the rest of your life. Also, meme stocks probably had a lot to do with this as well. I think it's probably, it's running into resistance here at the halfway mark. I think it probably consolidates around here. Maybe it has a little pullback. Then it comes back to the top of the range. Then you know what's going to happen then? It's probably going to get rejected and come back down. So Russell, range bound forever. It's like the Kathy Wood of stocks. XLB, materials. Trying to just carve this out. I mean, we're putting in a series of higher lows, moving up here. Already got our nice move here. Paying attention to, does it take out this little high here? If it does, I think it retests all-time highs. If it retests all-time highs, I think it goes higher. Material sector, communication, XLC, new all-time high, big surprise. Same thing here. I think it just keeps creeping up to the upside. Bullish consolidation as far as I'm concerned. It's just putting in higher low after higher low after higher low, higher high after higher high after higher high. Nothing to see here until some of this bearish divergence on the weekly plays out, and that could literally be months from now. It could be next year. XLY, consumer discretionary, was able to reclaim that level. That is definitely a good thing. Back on top of support. This was obviously a key resistance for a little double top before the sell-off. We were unable to maintain support here. If we maintain it long enough, I think we get a powerful move to the upside. Getting a hard buy signal, building up some strength. I think consumer discretionary looks good. XLE energy, obviously oil is a big factor here. So bouncing the 200 exponential and simple is good. Let's see, can it cross 821 back to the upside? Obviously see some very clear bullish divergence taking place between our 2 points right here on the TJD TDMACD and the TJD TDMACD and the Jewel Thief. Between these 2 points right here and our points right here, and now I expect it to push back up to the upside. Probably will run into some resistance around this level. You know, oil obviously getting to like 80 bucks is going to correspond with this thing like retesting the highs. So, but we don't want to see it just keep lacklusterly bouncing off the 200 exponential and simple, especially not putting in lower lows. Could it come down here again and put in a third drive of bearish divergence and then have an explosion? Sure, definitely. But again, we just watch oil and then we don't have to look at that. XLF financial, retesting the highs. You know, this is obviously was going sideways forever, and then people decided to jump back into some of these ones that have been going sideways. Speaking of going sideways or down, meme stocks, financials, Chinese stocks. So we'll get to them in a minute here. XLI industrial back up here, retesting the highs. Again, we still got a little way to run on this. We went sideways long enough. I think this thing is going to try to push to the upside. We have flipped over the slope blue on the TJD TDMACD. We have gotten that bullish reset as we basically, what did we do? We went sideways this whole time while the indicator oscillator just reset, and now we're back on top of the slope line and it's blue. This thing has the power now to get to our target up here at $118. Do I think it gets there? I do. I really do. I mean, when is it going to get there? I don't know, but there's confluence between our channel and there's confluence between our even bigger channel. So in my opinion, we're headed up there to test the top of the range. I mean, every other time we have come up here almost to the top of this massive channel, going all the way back to 2009. So I think very likely we're going to go from the bottom of the channel here, just like we did back here for the crash of 2008, come all the way back up, stall a little bit here, maybe come back down, come up. So do we stall here and come down? Possibly, but I think it looks like we're trying to go up right here. We are seeing on the weekly, though, a bunch of weakness. So if we did come down and retested the heart line at the bottom of the channel, I would not be surprised. But it's going to try to make one more push up here. We'll have to see, does that fail or does it succeed? $3.5 trillion infrastructure bill, getting through the House, looking good here. Nobody's willing to fight it. Who fucking cares? $3.5 trillion? Oh my God, it's so much money. Over 8 to 10 years? Over 8 to 10 years? 3.5 trillion? What even is that? That's like 300, 400 billion a year? That's chump change. That's how much I spend on toothpaste. $4 billion a year. That's nothing. Are you kidding me? Oh my gosh. People are acting like it's the end of the world. We spent like $6 trillion in the last year, in 1 year. And people are afraid we're going to spend $400 billion on infrastructure. Oh my God, it's going to drive prices through the roof. We're going to bankrupt the whole country. By the time the 10th year arrives and we go to spend $400 billion, year 8 or year 10 or whatever, by the time we go to spend that last bit of infrastructure, we're going to be able to like fucking fix like 2 feet on one bridge. We're going to be able to pour like 6 cubic feet of concrete for that price. I mean, get out of here. Who cares? $4 trillion, $3.5 trillion. What a joke. We'll probably pay more in reparations than that. Get out of here with your infrastructure bill. Shit. If it's not 10 trillion over 5 years or 2 years or tomorrow, I don't even care. People are just getting scared. They're just mad because somebody else is spending the money. It's not my guy. Oh, who cares? Nothing's going to get built. It's just going to get funneled into politicians' family members' company accounts. XLK, technology at all-time highs. Nice, powerful move up here. Consolidation, then it goes higher. Looks good. Or maybe it just dumps. I don't know. But probably statistically goes higher. XLP, consumer staples, showing some definite weakness right here. Looks like it wants to break down from the 821. We get it pull back here like this. Some little weak little pullback. I mean, maybe comes back to like 70 bucks. Maybe it finds support where it's already at. This is a key level, I think. If it gets down here to 68.75, that's definitely a buy. You got your 200 exponential and simple. We've got quite a bit of confluence from our previous highs and previous support. It's probably time to reload if it gets down there. Real estate, XLRE, showing some definite weakness right here. Again, we're just seeing like everything cycle through. Seeing some clear bearish divergence on our indicators taking place. So we do need to pay attention to that. What is that going to result in? probably a decent pullback to retest like the $44 level. If it starts getting down here again, all the way to like some key supports right here, and the 200 exponential and simple starts looking a little more juicy, I mean, it looks like it might lose this 821. If they get across to the downside, that's definitely going to change my mind on this trade setup. XLY, wait, did we do discretionary already? Oh, maybe not. XLY, consumer discretionary. Wait, didn't we do XLY? Is it on here twice? You cheeky fucker. Get out of here. Sorry about that. I know I'm not crazy all the way. Transportation, XTN. I wonder if I switched that off with something else. So if a sector was missing, let me know. Obviously, just been cruising up here inside of this channel. Broke down from the channel. Bounced to 200 exponential and simple. Coming up here at that key resistance level. Looks like it wants to punch through. I think it's coming back up here to retest the highs. We'll see what happens though. Remember, a lot of times when we break down from a key level, we'll push back up, put in a high, and then create divergence and then sell off. This looks like it's gaining momentum to the upside, but it's also getting that sell cross right here. So it's probably going to go like sideways, maybe a little bit of a float up here in the meantime. But I mean, this is obviously, good, because transportation weakness is going to show like weakness on potentially the whole economy. So if oil looks good, if transportation looks good, that's going to kind of like balance out a little bit. And then we can see, potentially this thing run a little longer. I think hopefully till the end of the year, maybe till the end of the year. We'll see. Jets, weak, but looking decent. Had a nice little push up here off the lows. Definitely was worth noting, some clear divergence was taking place here at the lows. Still below the 200 exponential. 200 simple has not rolled over yet. So we'll see what happens when it gets up here. Probably a rejection attempt to save it. But honestly, this does not look great. Hail, same thing, below the, well, it's slightly above the 200 exponential, but starting to roll over. Got a nice little move up here, coming out of the bearish control zone, showing a little bit of bullish divergence here. I don't think it's going to amount to much, but probably a retest of the 200 simple, maybe like 59 bucks, somewhere around there. Still shitty though, in my opinion. UPS, showing that weakness, just going sideways here. That was like our sideways move up here. Now it looks like it wants to cross back down. That was all green histograms, and we went nowhere. This to me looks like a bearish reset. I think we're coming down to 200 exponential or simple. I think we've closed this gap. 180, I'm a buyer. I'm a buyer at 180, honestly. I've been waiting for this thing to come back, and I really think there's enough confluence at this level that we could easily come. I think this would be the trade to have right here. Like a little. I think if we break down below like a 4% off of that 180 level, 15% target to the upside to close that gap from the earnings call, that's like over 4-to-1 risk reward. So that's a freebie right there. In my opinion, I'll take that one all day, every day. FedEx broke down below 200 simple and exponential. Both have negative slopes now below the 8 and 21. Showing a little bit of bullish divergence down here. Looks weak though. I mean, it doesn't mean it doesn't come back up here, but does it fill this gap at 295? Maybe, but it doesn't have that same level of like confluence for support. So I think honestly UPS is the trade to have, because that one's got our 200 exponential and simple right there. Still slightly more bullish because we're above them. Come down, retest them, get a bounce. As we're here, we're looking at basically like resistance at the rejection at 279. Doesn't mean we don't get up here, but the trade setup's not there. And again, that's my point about I just take the easy ones. I don't need to fish for the hard one when the easy one's just right there poking its head out. Like, look at me. Look at me. Tesla pushing back up here, trying to check that resistance again, trying to move up. Showing a little bit of bearish divergence here. Between these points. It could easily push up here, find resistance at this point, and put in a third drive. I'm still not particularly fond of Tesla and how this looks right here. I don't see it. I mean, we basically got picked up by the 200 exponential moving average, and we're just creeping up along it. I don't want to see that. I want to see it retest a couple times and then ricochet. This tells me that every time we come down to it, people are kind of buying the 200. They're taking a little stab at it. They're opening a couple options, but they're doing it reluctantly, and there's almost no follow through. So in my opinion, this looks shitty. Now, if we break above this level, like 780, it starts looking good. You could argue, well, we already broke out of the triangle, so it already looks good. Sure, maybe it does, but 200 exponential and simple moving average are not supposed to act like this on something that's strong. This to me looks like just a consolidation before a breakdown. Now, again, it's possible that I'm wrong, but I've seen this play out too many times. And typically when you see that weakness off the 200 exponential and simple, it just goes sideways to down for long periods of time. You almost never see, this is what we want to see. We want to see it sell off and bounce it, and then see ya. That's what we want to see. That's strength. This to me, this is a bunch of people that were long Tesla, that are mad Tesla bulls, that are just trying and trying and trying. And come on, Tesla, you could do it, buddy. Come on, buddy, you could do it. And they're just giving Tesla a little pat on the butt and hoping it comes up and just buying some more options. And then one day they just get fucked. No, thank you. Uber broke down from those key levels, saw a little bit of a reaction rally right here. It looks extremely weak to me. We have a low right here. We have a lower low right here. We have some pretty clear divergence taking place here. If we switch out to our weekly chart, we could see a little more clearly what's going on. You know, we had this little kind of bounce up right here, and now we're just pouring out. We got the 8 and 21 cross to the downside. I got to see this thing come down to some key levels. This to me looks like just a quick little reaction rally. We're very clearly in the bearish control zone. We're very clearly seeing all red histograms on the weekly. You know, I think people bought $40 because it's like a nice round number, and they're like, it's already fallen $20, so this has got to be it. Doesn't look good to me. Pinterest. Pinterest seeing a little bit of a reaction rally off this area here. We'll see how this plays out. We're definitely seeing some strength, getting a hard buy signal. I think you could probably, I mean, it's at a little resistance right here, but there's definitely an argument to take a stab at Pinterest from this area. Maybe we're not going to get, you know, that easy trade off the bottom here, or at least not yet. You know, if it comes down here and takes that out, what are we looking at? Just to fill the gap. Now, let me just slide these over to the... If we fill this gap right here, we're looking at 8.5% to the downside if we take out the low. We're looking at 27% to the upside just to fill that gap back here and our key fib level. So even if we just said it's not going to quite fill the gap, but just close that fib, I mean, we're looking at 3-to-1 risk-reward ratio. I mean, I could throw a little something at this after how many times we've crushed it on this thing and how technically it's traded. Bunch of green histograms in a row, hard buy signal. It is below the 200 exponential and 200 simple, but what does that amount to? It amounts to a retest. In my opinion, we come back up here, we retest that key fib level, we retest the 200 simple moving average, we try to save price action, and then we see what happens from there. Yeah, Pinterest is a go. Pinterest is a go. Wish is trying to carve out a bottom. We are at that 2.618, which was our target before it even happened, which is obviously great. It is still getting rejected at the 8 right here. It did have a nice little move up. What was that, like 10 or 15%? Still in the bearish control zone. We are seeing 2 green histograms on the daily, so there's definitely some signs of life out of this thing. Could you take a stab at it now, or do you wait until, I mean, really, if you're going to wait one day, you might as well wait till Monday. You know, like the old saying goes, if you're going to wait one day, you might as well wait till Monday. I think I just made that up right now for the record. Yeah, I mean, you could argue, I mean, there's definitely a trade to be had right here. That's a hefty stop loss, though. Just after that nice little move out there. Really should have just took a stab off the 2.618, but I mean, that's 14 to 31%. It's still 2-to-1. So maybe just a little stab at it. See what happens. Come back up, retest the 236. It's still 2-to-1 risk reward ratio. So, I mean, even on a coin toss, and even if it did come down here lower, do you take the stop loss and get out? Or are you looking to add off of, well, probably just taking it. I mean, this is what happened last time. We bounced, we got a little push up here, came down, took out that low, and then we went parabolic. So, I mean, not that it's going to do the same thing again, but I half expect this to bounce, come up here, come back down, slightly take out that low, and then I'm looking for the buy for like that big bounce back up here. So I think, like I said, if we're going to wait one day, might as well wait till Monday. So let's see how that works. See how that works out in the next day or two. Airbnb, this was a nice push up right here. Obviously, it was a nice push up right here, up to the 0.5, which was the next level we were paying attention to, and clearly our resistance. Obviously did not enter into this one, or I would have let you guys know. Nice little 10% move or something like that. So we do see the knife all the way up at the top of the range. This probably, I think more likely than not, it gets rejected. The real argument is, do you take a position off the 152 range at the 618? Very clear support through here. Very clear resistance, rather. Very clear resistance here. So if we come down axis support, still above the 821, and this starts recouping, I think you could argue that that's a trade to be made. We were tempted to take it off of that blue slope line back here, exiting the bullish control zone. So obviously that would have been a good idea. But again, if it doesn't look perfect, I don't usually take it. So, but there's definitely some potential here. Vodafone, we're seeing that strengthen up here, starting to put in a little bit of gains. We'll have to see what happens at 1737. After that, 1776. There's just so many things that look better than this. But if we get above those moving averages, maybe things change. But I still can't get excited about this one. Bumble had a nice little pushback up here, took out those two key levels. I think we're probably just headed back to the 0.5 and that key resistance 57.27. Got to just wait and see what happens. I really got to see this thing break one direction or the other. We either have to get through this or we have to break down from the bottom of the range. But this range is too tight to even fuck with at this point in time. It's just a coin flip in my opinion. Baidu. Okay, so speaking of the Chinese stocks, got a nice little push up on them. You could argue whatever you want. This is the bottom. They're oversold. We hit the 618. We obviously hit our target. Hit it perfectly at the 618. Maybe it's the bottom. If we consolidate here for a bit, I think we shoot straight up to the 0.5, 171. So there's definitely some meat to be had on the bone right here. And if we break through that, 186. If we break through that, 200. I don't see enough out of these right now. And honestly, if you extend this out a little bit, that was our resistance we kind of poked our head from. It's going to be very tough to get through this area. We had a nice little consolidation right here and a breakdown. And when we go to longer time frames, these China stocks look like shit. And there was more like bad news on these. And like now the SEC wants to investigate them, and they're like extra regulations. And I mean, if it's not China, it's the United States. So no thank you right now. Again, nice little move up on Alibaba. Same thing though, just back slightly above our key fib level. Got the perfect buy right here if you took it. Nice little bounce up here, but again, I mean that's a catching a knife. It looks so freaking weak on longer time frames. It's hard to get excited about these. I'd rather wait for a little momentum. Same thing with Tencent. Nice little bounce. Got a push up here. Pretty nice bullish divergence off of the low right here between our 2 points there. Nice follow through, honestly. 418, 420 to 475 basically. Nice little like 10% pluser. Let's see what happens here. What we want to see is this come back down, potentially put in either more bullish divergence or find support at the 0.5 and then push up here. It is back above the 8 and 21. I think we could easily get up to 506, possibly burst back up to 558. You could argue a stab is worth taking at this, but again, it's a tough sell for me. We have some key resistance through this area or support through this area, so it's going to be hard to break down from it. But, we've got a bunch of resistance above our head too here as well. So I think the key level to pay attention to is 502. If we get back above the 382, start consolidating, I'll probably take the next leg up and assume that that's going to be our low. But also we're getting close to the monthly closing too, and that's going to decide a lot for these China stocks too, as the monthly chart is going to basically look like a big old, I mean, if it gets bought up here aggressively, these China stocks do, they're going to look like bottoming candles. It's going to look like hammers. And, essentially, I mean, I can show you. I don't have to just tell you. But, obviously I look at these so often. I mean, that looks like a bottoming candle, potentially. If this gets bought up any further, or even just how it is, with that Massive wick down here gets bought up. That's like sort of like a, wait a minute, this might be it. And then this one gets bought up too, especially if it closes green. That's going to definitely look like a hammer to me. And it's going to look like we're going to come back up and avert this cross. Now, does it just have a little weak move and kind of chop sideways for 6 months, a year? It could definitely. But there's definitely some potential here. We are kind of bouncing the slope line here. But again, there's just, these China stocks just look so weak. At this point in time, a couple of days left in the month, it's almost worth just waiting and seeing and then buying into momentum, in my opinion. Diddy, looking okay. Got a nice little bounce up above the 8. Still below 21. Showing some love. Out of the bearish control zone. It wants to push up here. Probably the worst of all these so far. And it's hard for me to ever get excited about Diddy because they basically did, people dirty. They were already under investigation by China. And then China was like, don't IPO. And then they still IPO'd and didn't tell anyone. They should probably be delisted, honestly. Or at least like fined massively. Kanzun Limited. BZ. Back up here at resistance. Getting rejected. This is the same type of thing where, it looks okay right now. But it doesn't look good until it breaks through this. If it gets back above 36 bucks and finds some kind of support, I can get bullish on this, honestly. Even if it is Chinese. Neo looking pretty good. Come back up. Retest the 200 exponential. 200 simple and exponential. Both have negative slopes below the 8 and 21. Looks very strong in comparison, but like weak in this area right here. So we'll have to see what happens. Definitely wants to push up here. I think we at least get a test back to like 45 bucks. So there's probably an argument to be had for a trade there. Let's see what we're looking at. I mean, if we break down below this level, it's telling us I don't think so. If we break above, I mean, there's just no meat on the bone on this thing right now. Yeah, I just don't see it. We'll have to see how this one develops. Have to see how it develops. EDU got a nice little push up there. New Oriental Education Technologies. Or EDU. I think that was like a 25% push or something like that. Yeah, 26%. Can't be mad about that. Did push down below our key fib level though. So essentially what I'm looking at is, obviously this thing has gotten absolutely shellacked. If we get back above the 618 and start to consolidate, I'm taking a long for this push back up to the 0.5. But right now, I've really got to see this thing show a little bit of strength. 52% to the upside. I mean, again, you could argue it's worth a stab right now for a couple dollars. Momentum's in your favor here. Well, sort of. After it went down 90%. Momentum's in your favor from this one candle. Out of the bearish control zone, hard buy signal. We were talking about this divergence signal at the bottom, so that was definitely giving us a little hello. A bunch of green histograms, blue slope line above the 8. I mean, even if it gets back up to the 21, that's a 25% move, so it's probably worth throwing a little something over this way. I mean, what's it going to do? Go to 0? Yeah, maybe. Taiwan Semiconductors had a nice burst up here off of our key support, as discussed. Very clear support here at the bottom. 200 exponential and simple. Burst back up to the upside. In my opinion, the move is probably done. We still have a high, a lower high, a lower high, and then probably another lower high here. And then here we just have a series of, the same low. Just a giant descending triangle to me. Now, we've seen a bunch of these descending triangles break to the upside. So there's definitely a possibility. We are seeing it pick up a little steam. But with so many other good semiconductor companies, why buy the shittiest ones? Speaking of the shittiest, here we have Intel. Absolutely looking like garbage still at our heartline support. This is our long-term divergence we've been paying attention to and why I really just want nothing to do with Intel. Monthly bearish divergence from this point, and this point, and our jewel thief as well. So we have triple bearish divergence that started back in May of 2018, and this is our third drive that just completed in April of 2021. So do I want to try to take a long and try to pick up a couple pennies in front of a steamroller? Fuck no. Talk to me down here at 42 bucks or more realistically, $35. When we get down to $35, we could argue the bearish divergence has played out and it's worth a look-see. But right now, I would probably rather buy anything than Intel, except for MicroStrategy. NVIDIA got the breakout we were expecting, new all-time highs, continuation, looks great. I expect it to keep just smashing to the upside until it doesn't. AMD consolidating, did not get the same little meme stock run as all the other meme stocks did, which this thing is officially classified as for me. So it did reclaim the 8 above the 21 still. So maybe we consolidate, push back up here. Could easily run up. I lose interest in things once they become meme stocks because you can't really trust this right here. I mean, look at like First Majestic. Look at all these other ones that became meme stocks and they just never are able to reclaim that level again. AMC, GameStop, like, so is AMD going to be different? Probably not. This time is probably not going to be different. ARKK, Kathy Failure Wood, Kathy the underperformer of 2021 Wood, Kathy the bunches of inflows and still can't make a profit Wood, Kathy the underperformed every index including the old Ruddy Wood. Yeah, I mean, if this doesn't perfectly sum up popular ETFs, especially ones with high fees, massive inflows, one good year, and then on top of that, like constantly on CNBC pumping them and talking about how people don't understand it. If this doesn't sum up ETFs, I don't know what does. I would expect Kathy Wood to underperform the indexes for the next 2 years and then probably have a stellar year on the third year. So, but yeah, looks terrible. One of the very few things in existence that is underneath the 200 simple moving average, barely finding support off 200 exponential moving average, and gone this whole year while everything else had stellar gains. You could have literally threw a dart at a dartboard and picked stock names, or a Ouija board and picked stock names and done better than any one of Kathy's ARK funds. Absolutely horrible. Massive inflows, zero profits. Complete underperformer. Complete underperformer. Wow. She's got to be loving it though, because she's making money regardless. She can literally, oh, and that's another thing too, is she trades all the time and she's not a trader. If you're investing in 5-year like time horizons, why are you trading every day? Why are you trading every day? You don't know what you're doing. You pick macros and stop fucking trading. If you're listening, Kathy, you suck. ARK F, same thing. Pathetic, underperformer, terrible. Skills, SKLZ, back here retesting the initial low from the IPO. And if this isn't the perfect example of a market cycle playing out, goes absolutely parabolic, sells off, lower high, capitulates for months, goes back up, lower high, starts to build some strength, everyone gets bullish again, and finally tops out and then goes all the way back to nothing. This is it. This is perfect. This is a perfect example of a market cycle, all summed up into one. And then what's going to happen now? What's the next step? It probably just goes sideways, kind of nowhere, maybe even goes and puts in a new low, then slowly grinds up, and then like years from now, it starts to like move back to the upside, and then we just take this exact chart right here, and then we put it next to it, and then it does the same thing again. So just so we can see how that plays out over time, you can literally just take the bars pattern tool, and we can just go from the beginning of its life to the end of its life, and then we can just put it right over here, and that's probably what it's going to do. Probably going to do something like that. And then next time, maybe it'll just go a little bit higher, but same fucking thing. So as far as I'm concerned, it's going to be very, very difficult for this to ever go up, as there is literally all sellers above your head here. All sellers, all the time. Every time you move up a little bit, somebody's going to say, fuck this, I'm out. Teladoc, extremely weak, well below 200 exponential and simple, barely hanging on to the levels right here. It looks like it wants to just dumpy dump. Looks like it just wants to roll over. This was a pathetic little bounce after just getting absolutely crushed. I don't know, maybe we go back into lockdowns and it starts performing or something. Palantir, Oh, we bought gold. We're doing it. We're doing it. They bought like 2% of their balance sheet in cash in gold. Okay. It's a hedge. Let's calm down. It's not like Palantir knows something. And I'm hearing like all these conspiracy theories. Palantir knows something. They deal with government contacts. They're buying gold. They didn't buy GLD. They bought physical bars of gold. Let's calm down. This is like the equivalent of like you or me going out and buying like a gold ring. All right. Palantir buying like $50 million in gold bars is literally like you buying a necklace at the mall. All right. This is not a big deal. Let's wait and see what happens. I do like that it's back above the 200 exponential and simple. I do like that the 821 are crossing. We're getting a hard sell signal. We're seeing weakness in this thing. Let's calm down. A series of lower highs. Okay. Palantir does not know anything. They don't have insider information from the government. They're not hedging $50 billion from their balance sheet with $50 million. Like, it's literally a drop in the bucket. Corsair, all the gold bugs are like, oh God, this is it. Palantir. Oh, Palantir bought the gold. This is it, guys. Corsair. Seeing a little bit of love here. Definitely nice. I was expecting it to break down a little further. We are seeing a little bit of strength. Reclaiming that 0.5. Definitely good. If we consolidate here a little bit, I think we burst back up to the 382. We never really got a true test of the 382. So there's definitely a potential to be had for a trade here, I think. Move up to the 382 or invalidation with a lower low. 16.27 to an 8% stop loss. So that's our 2-to-1. That will meet our criteria. That would also be a retest of the 200 simple, exponential rather, and the 382. I do like that one. Corsair Gaming, looking like a buy, at least for a little scalpy scalp. Unity Software, nice little move up here. Looks like it's getting rejected at 618. If it breaks above the 618, I think it heads up to the 786 or at least the green 236. But I want to see it consolidate here. We did flip the slope line over blue. We're back on top of both of them. Looks promising. Definitely looks promising. Big Z, Zed's dead. The old Zillow group breaking down again. I don't see any divergence. We did get back above the 8. We're getting rejected to 21. I mean, there's a lot of resistance through here. Man, it's hard for me to get bullish on this thing right now. I just don't see it. I want to see some kind of divergence or something. I think it's still more likely to go down than up. We lost the 200 exponential and simple. Bull slope to the downside. This looks like a little reaction rally. I think it's more than likely headed back down to $84 than it is headed back up to 120. But either way, you're smack dab in the middle. So coin toss, no thank you. Hard buy signal coming out of the bearish control zone. Bunch of green histograms. Closing at resistance to the 21. So, if you wanted to take a shot at it, you could. This is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. I mean, there's just no trade setup to be had for me. 11 to the downside, 13 to the upside. So if you want to flip a coin, go to Vegas, and at least a pretty girl can flip the coin for you while you drink some drinks and probably wear a mask. I don't even know. Probably have to. But I'd rather be at a casino if I'm going to flip a coin. Zoom video looks very weak. Tried to push back up here. Looks like a double top. As we discussed, got rejected off of, once again, this is that same signature. We see the blue slope line still in effect. We come back up. We get rejected perfectly at the slope line. Hard sell signal. Rejection of the 821. Back down below the 200 simple. Back down below the 200 exponential. All slope to the downside. Zoom video looks like it's about to take a zoom to the downside. That was not very clever, but you get what I'm saying. Zoom. God, so many tabs. We're doing it, guys. We're doing it. We're ripping through these assets. Square. Square is next. Back up here at resistance. Where did it go? Oh, look. It was at the bottom of the channel in 200 exponential and simple. Oh, look. It's back at the top of the channel. The same thing that always happens every time we're trading inside a channel. We continue to trade in a channel. One of the most reliable buys you can ever get on any asset is when you're inside of a defined channel range and then you bounce to 200 at the bottom of the channel. We literally discussed like 3 or 4 assets today that are in that same posture down here looking to do that same setup, and I expect them to happen, including the old Russell 2000, which had just happened in. This obviously looked like a very clear topping candle. We did float up slightly higher based on that volume. Looked like this thing was going to top out hard sell, bunch of red histograms. This looks like it wants to put in a lower high here and then roll over. We'll have to wait and see, but I suspect that it's probably headed back down to the heart line, 232. PayPal. Yeah, we talked about this potential for a nice little jump back up here on PayPal. Came back down, put in a lower low. Didn't see any there's slight bit of divergence that took place right here, but didn't show up here on the TJD TDMACD. I mean, you could argue the hard buy and a couple green histograms, and it's worth a shot. We're back up here above the 821, so definitely, I mean, it'll probably still play out. We'll at least probably get a push back up here to 287. I think we do close the gap at 300. But again, we've seen a bunch of other trade setups just today's stream better than this. So, but I do like to look at all different assets, and sometimes I will be biased for a slightly less attractive trade setup if it's in a sector that I'm light in, or vice versa if I'm already heavy in a sector, just to kind of keep the balance, because we need balance in the force. You can't be all good and you can't be all dark. eBay back up here, retesting the highs again after that little burst to the upside. Looks strong. Looks like it's trying to creep up here. I think it'll probably play out the rest of this move now. That was a beautiful retest right there. I think it's probably headed up to like $78. We'll see. We'll see how it plays out. Definitely looks better than a lot of things. Snapchat. We still have this massive gap down below us. We have obviously a double top up here as well. Seeing a bunch of weakness, trying to get some strength right here. If this thing puts in another lower high, I really think it's coming back down to like $63. And by the time it gets there, it's probably going to line up with the 200 exponential and simple. So I think probably buying this at $60 is a very likely trade setup. So, we'll wait and see. Maybe it doesn't get there, but I have a feeling eventually we get something like this that plays out. Which essentially we'll be able to get taking off like this previous low right here, and then a high obviously back up to like retest the range, which will give us essentially like a 3-to-1 risk reward setup. But where we're at right now, I don't really see a trade setup. I think it probably rolls over. Apple showing some weakness at the top of the range here, having some trouble getting through that resistance here. I mean, I don't know if it just pours out right here, but we're seeing the hard sell. We're having trouble hanging on to the 821. We can't break through this resistance here, and we're seeing a bunch of weakness on the TJD TDMACD. Slope line looks like it's about to flip over red. I think Apple's getting ready to pour out. I expect it to find support down here at like 135, but as far as I'm concerned, the trade setup played out. 17% to the upside. We'll have to wait for the next attractive one, which I think probably we get it. I think we probably get a hit. Another little hit of the apple, another shot of the old cider, another bit of that spicy apple butter down here. Something like this. Get like 10% to the upside, 5% to the downside if we lose a 200 exponential and simple. But I think we get this thing picks back up. We should be able to get a buy on this like mid-September, somewhere around that range. Maybe sooner. We'll see. We'll see. I'd always rather buy something like Apple than like MicroStrategy, just because, or like, I don't even know, AMC, because like Apple performs consistently over time, averages like 25 to like 50% gains every year for like the last like fucking 5 or 10 years. You want to own that, or you want to own AMC? Like, that's where your fundamentals come in. Amazon, very weak. This was exactly what I said back in the day. When this happened here, it was a straight up throw over. And then when we saw the lower high right here, you knew this thing was about to dump on your face. Back down here at a key level, trying to hang on to the 200 exponential and simple. They're basically flat right now. We actually lost both of them for a second, the slope, and it bounced the heart line here. I expect this to roll over. Matter of fact, maybe it even retests the top of the range and then looks like a head and shoulder and then comes back down to the bottom of the range right here. I think it's very likely. I think it'll be the same situation again, where we're able to just swoop Amazon back up at the bottom of the range and then get this trade out of it. And then maybe next time it breaks to the upside. But I think this is the trade to be had. You could argue that there's a little mini trade to be had right through here, up to the top of the range from where we're at right now, if this decides it wants to put in a head and shoulders. But you got to keep a tight stop on this, which is, I don't really like it. It's like a 5.7% stop loss with a 8.7%, 8% risk reward. it's just not. It's not there for me. I mean, again, you know, it's better than a coin toss, but not as good as just being patient. And it's not like, you know, it's not like this thing's just going to take off tomorrow. It hasn't done shit in a year, an entire year. Amazon has not done anything. So I'm not exactly afraid of missing out on Amazon tomorrow. Although they are opening up Amazon stores, which I remember talking about like a year ago. And I was like, how long before Amazon buys up all this corporate real estate that's sitting around empty because all these shops go out of business, and then they start using them as basically Amazon stores where you can go in, try stuff on, check it out in person, put your hands on it, finger it, touch it, poke it, bite it, lick it, whatever. And then you can order it through them instead of just doing that at another store and then still ordering it through them. Or vice versa, you can order the actual shit at the Amazon store and they can have it delivered from their fulfillment centers to the store, and you can pick it up in an hour or a day or whatever it is instead of having it shipped to your house. You know, maybe you have it shipped there. They got little drones dropping it off, or maybe they have little robots driving their trucks. I don't know what's going to happen, but boy, did I ever call that one. Let's go! Facebook is next. Back up here, retesting the highs. Is it closing the gap? Yes. Is it going to keep going higher? Maybe, maybe not. Could go either way here. Facebook, very strong. Probably going to stay strong. But I'm not a big fan of old Fuckerberg. So Google, fucking stellar. Looks amazing. Back on top of the slope line here. Buy, sell, buy. That is our bullish divergence signal on the sell-off at the 821. Multiple green histograms in a row. Google, going to keep just pumping it up. And by the way, I love Google. Do you hear me? Do you hear me? I love Google. Hello, YouTube. Holla. Hey, I love Google. Google's great. And YouTube's my favorite. Hooray. That was a little throwback to my homies that are listening. Although I think the amount of nice things I say about them compared to the amount of controversial stuff I say is probably not a good risk reward for like my channel growth. But hey, I keeps it real. Netflix, straight garbage. Got the bounce perfectly off the heart line and 200 exponential and simple. Another lower high. Absolutely pathetic. Could it still roll up here to the top of the range? Sure. I think it's more likely to come down to the bottom of the range. This is what you don't want to see. Pathetic bounce off the 200s, then breakdown from it, rejection. Pathetic bounce off the 200s, then breakdown from it, rejection. We're probably headed back down to like 465. Netflix is straight up trash. Going sideways for a whole year. I mean, maybe that was priced in. Maybe. And they're probably not going to be like crushing their numbers in the future, but maybe I'm wrong. Let's see what next quarter's earnings look like, because I have a feeling that we're going to see a drastic difference between the 90% beats for this last quarter on all this shit. 90% of stocks beat, as opposed to the probably like 50% beats that we get at the end of the year for Q3. But what do I know? We'll wait and see. I'm sure the economy is just going to be doing fucking amazing since they like cut off all the stimulus and people are going to have to start paying rent again. And yeah, I'm sure we're just going to grow like this forever. Yeah, right. Microsoft, crushing, doing great. Got to be careful. Still showing a little bit of divergence, showing a little bit of weakness, but just putting in steady all-time highs. Maybe it comes down, closes the gap, and then jets again. There's really not even a gap. It pretty much already closed it. So, I mean, this thing is just... I expect this to go parabolic, like one of these guys, before it comes back down to 200. So, you know, again, no trade setup to be had right here, but if you're going to buy into momentum, might as well buy into one of these ones that's got it, not the ones that don't. So, drinking comments. Another great stream, says R Kids. Thank you, brother. CW, thank you. Great information as always. Appreciate you, my dude. Thank you for always being here. Gabriel M says, great TA. Thank you, my man. Glad to have you, brother. And what do you think about SE? We can take a look real quick. Are you talking about C limited, Gabriel? I don't know if this is what you want, but you got it, dude. Let me know if you're still there. If this is what you were wanting to look at. I mean, shit. It looks good. I mean, it's going absolutely parabolic. Only strength on the monthly at all-time highs. And honestly, if it's at all-time highs, I expect it to continue making all-time highs. On the weekly, absolutely just punishing anyone that's not in this thing just by lack of being in this. It's crossing back above the slope line right here. All green histograms, still inside the bullish control zone. Everything pointing up on the weekly. Very powerful uptrend. And then on the daily, again, I mean, it's chopping a little bit here at the top, but I mean, it looks great still, honestly. It looks like it's getting ready to break out again to the upside. As far as targets are concerned, we can just throw a fib target off that previous high back here. Looking at the Fibonacci extensions, from our 283 top in February of 2021 to our March 25th low down here, and then we just extrapolate that with our Fibonacci extensions. I would say, you know, typically I use the 1.382, but it's kind of just a WAN target. I would say the 1.5 up here at 347. After that, I'd be looking at 364 for my two main targets. And then after that, the 2.618, which is going to be 543. That's, I mean, it's obviously a ways up there. But, you know, if we break through the 1.618, I think it probably goes parabolic. You could argue the 2.0 is in there somewhere. It's worth taking a look at. This thing just looks like I mean, again, the way I feel about blue sky breakouts is when something breaks out to the upside, it continues going to all-time highs until it doesn't, because there's no selling pressure. It's the same way when something goes all the way back down and all there is selling pressure above its head. Like every time it moves up, there's just a million people dumping on you. Well, with something like this, everyone that's ever bought this is up. So there's no reason for anyone to ever sell. So the likelihood it just keeps going higher is 95%, in my opinion. The key areas to pay attention to you know, obviously those fib levels, but also the measured move of the pattern that it was developing right here. So we have very clearly, obviously, you know, what amounts to an ascending triangle. As far as I'm concerned, you know, it topped out right here, basically came down, put in a low, came down, essentially put in the same high. So depending if you're going to draw it to this point or this point, you basically have this triangle playing out. Now, you know, depending on what time frame you look at, or if you're just trying to make it look pretty, just to kind of get your point across, which is what I'm doing right now, this is basically what we're looking at. So this is a bullish pattern, obviously. Everyone but the right one. Obviously a bullish pattern. So when it breaks out, we expect it to play out from the bottom touch to the top touch or the resistance point, and that will give us our measure move, and it's probably going to come in at like, yeah, right around the 1.618. So I think right around here is our target for like that initial move to the upside. That's where I would be looking to either take profits or potentially, like, you know, for a de-risk type scenario, right between like 364 and 378. But, you know, I mean, you're already better part of the way there. This is a perfect example of what I want to see with a technical breakout like this of a pattern. We have a very clear pattern. You know, we get a little push out right here and then break back down. You could argue, though, that it was like a false breakout or just a failed breakout. Then it acts as resistance again. We get the same thing happens here. It comes back down and retests it. And then finally what happens that you want to see with the confirmed breakout is we break out, we retest it, and it acts as support. And then immediately once it retains support, then it's like basically a confirmed breakout as far as I'm concerned. The retest, consolidation, and then continuation. So as soon as we broke out from here, got the retest, and then took out that previous breakout high or closed at it right here, you can get extremely bullish on this, in my opinion. So typically you would take the, you know, buy from either off of support down here or off of 311 and then expect the measure move to play out. So, you know, obviously in this case, we're a little late to the party. But, you know, essentially, if you took the buy right there and then assume the more meager target, you're looking at a 2-to-1 risk reward ratio to the upside or downside. You could basically take that trade now if you wanted to, but I wouldn't use a hard stop down here. Instead, I would pay attention to what happens, because if we come back down, well, you could use a hard stop depending. If you come back down and you break through that, you're not only breaking that key resistance that should be acting as support, but you're also going to be breaking out of the bottom of the triangle. So that would be considered like basically a failed breakout or a throw over. But even now, you could, like I said, you could take that trade now if you weren't already in it at 2-to-1. But I'm assuming if you're interested in it, you're probably already in this thing. But as far as I'm concerned, probably going to keep going parabolic. Okay, so checking out gold here. I know everybody got super bullish on gold because it got bought up aggressively, and this was just a shakeout, and now gold's gonna go to the moon. Probably not. It's probably just gonna get rejected off the 200 exponential and simple, come back down to 821, cross back down, and then come back down here and revisit the lows again. We do have a positive slope line right here. We did have very clear bullish divergence play out off these 2 points, and this is probably the bullish divergence bounce right there. I do not think gold is just going to all of a sudden start doing fucking phenomenally. This looks like total shit. This chart looks absolutely horrible. And, you know, to all the people that want to just hodl gold and wait for the next breakout, well, you better hope to God that this doesn't happen right here, because gold topped out in 2011 and then it broke down from that area in 2013. So it went sideways to down for 2 years. And then after that, from that breakdown in 2013, it did not reclaim those levels until 2020. So 7 years you were underwater if you didn't sell out there. So, you know, there's definitely an argument to be made to paper trade, hedge your physical holdings, okay? Or look at this as a savings account, not as a trade. And if you're all in on gold and metals and you're wrong, have fun being poor for the next decade. But, you know, I obviously hold gold and silver, and I'm a strong believer in gold and silver, but they're a hedge. They're a savings account and a hedge. They are not investments. If you're investing in gold, you're investing in a savings account, and that's okay. That's fine. They retain your spending power. They're great for retaining your spending power over 10, 20, 30, 40 years, 100 years, 1,000 years. But these are not speculative assets. These are the opposite of cryptocurrencies and stonks. Silver looks absolutely terrible. Broke down from the 821, 200s, all rolling to the downside. Pathetic move as where gold got that push to the upside. And what does that tell us? Well, it tells us, let's take, actually, you know what? Because I was nice about every other asset today. Let's talk about silver. You know what? We could be nice. I could be nice while I shit on the silverbacks. I can do both at the same time. This was our high back here in 1980. And then from that high, silver went down until 1993. So to all the silverbacks that are expecting higher prices, remember this thing went down for 13 years. It went down for 13 years while you were living in your mom's womb and then in her basement, okay? And then it went parabolic from 93 till 2011. So for 18 years after that, it went up, okay? And then after that 18 years, and you guys still didn't know about silver or care about silver or have any silver, okay, remember, it topped out again at $50, and then it went down again for another 4 to, depending if you're counting this low here for the CVD low, another 4 to 9 years down. And nobody gave two shits about silver. And then this is where you guys all got bullish. Right here at $30. And you paid $12 for your Eagles over spot. So you're in them for $42. So even if we go all the way back up to the top of the range and we go parabolic again, you're basically break even. Because premiums are at all-time record highs. So better hope this fucking thing doesn't break down right now. Now, the saving grace for all you little silverbacks out there, for all you little monkey fucking, what are they, what is it? Why are they all monkeys? The apes, the silverbacks, the fucking gorilla boys. I don't know. I might have made up the gorilla boys. That might be made up. The apes, the silverbacks. I know there's another one. What do they call the AMC chimpanzees? Or no, I can't remember. There's too many monkey names. For all you monkeys out there that bought into silver, this is your saving grace. The biggest cup and handle to ever exist in all the world. This is your saving grace. Cup and handle, rounding bottom, double top, okay? And then after the double top, you enter into a channel. It's hard to see because there's so much bullshit on this chart. But these green lines right here are a descending channel. And then you break out, retest the channel, and then you put in a smaller version of that same pattern. But the problem is, before you get to the $50 to break out of this thing, you're probably coming back down here to like $17. So probably coming back down to 17. You better fucking still buy silver at $17 if you were over here buying it at 30, or I'm going to come to your house and spank you, you little fucking silverback pansies. When we get back up here though, and we finally break through $50, if that ever happens, if we're still alive and we didn't nuke ourselves or get hit by an asteroid or figure out how to make silver out of monkey poop, then the measured move will be $91. So next target, $91 in like 15, 20 years, or if the entire world melts down. After that, 2.618, $108, 3.618, 143. But my actual final target, if we make it to the massive 1.618, is $240 for silver. So one day, silver will hit $240. But in the meantime, will every other asset ever do better? Probably. Yeah, probably. XRP will probably outperform silver, historically speaking. Because, I mean, like, XRP didn't put in a new all-time high from like 4 years ago. Silver still hasn't put in a new all-time high from 2011. And then before that, it didn't put in a new all-time high from the 1980s. So silver is like the XRP of metal. And you guys know how I feel about XRP. It's okay to play with. It's okay to make some money off of. You can have fun with it, but don't join the fucking cult. So gold-silver ratio obviously broke down back here at the 821 cross, broke back up here at the 821 cross. Are obviously targets to retest the 200 exponential and simple up here at like 82. I do expect the measure move to play out a little bit closer up here to like the 90 range, 90 silvers per gold. And then after that, I expect this to drastically fall. I expect a massive rejection all the way down here to 40 silvers per gold. So that's when you want to be in silver. When does that happen? Probably in a few years. It's probably going to be years before that happens. I mean, I don't think it's realistically the way this is going. It probably tops out somewhere around like November 2022, something like that. November 2021. So it probably tops out around the end of the year, this year, somewhere around that range. And then it probably just goes sideways to down for like, let's see, last time it happened, roughly, just to get an idea, February 2010 to May 2011. So a little over a year in a downtrend. That's gold losing value compared to silver. So if this tops out in roughly November, December, I would expect roughly November, December of the following year. So maybe we peak out here in 2022, somewhere around there, roughly. This is when we want to be getting silver. We want to be buying silver this whole time while it goes parabolic in comparison to gold. Right now, gold is better than silver because we're going up in a very clear trend to the upside. And silverbacks are getting very, very wrecked and entering into the silver wrecked city bitch clan. I think that's what they're changing their names to. They're like, we're buying billboards, guys. We're getting billboards for the silver squeeze. Yo, maybe you should not waste your money on billboards, you dumb fucks. You don't have to advertise for silver. People either buy it or they don't. You can't convince the world that silver's cool all of a sudden. Silver was cool for like 2 weeks. And then there's those of us that have been in it for years and years and years that have bought it at much lower prices. But 2 weeks, guys. You had 2 weeks. XPT Platinum still looks like shit. Pathetic move after the breakdown. Coming back down here to revisit the lows. That was obviously a double bottom reaction rally with bullish divergence off of the 382. I still very much expect it to get down to the 0.5. 869. It is getting very clearly rejected. It is losing the 200 exponential and simple. Platinum looks like crap. First Majestic. Speaking of silver being cool for like 2 weeks, this was the 2 weeks. Silver was cool in February. Excuse me. Sorry, I could have muted that. The 1st of February, silver was cool. Hasn't been cool since then. Probably won't be cool for like another 10 years. and First Majestic is probably going to like $7. So Silver Juniors look like absolute crap. Tried to break out to the upside, got rejected, retested after the rejection of our very clear support line right here. After that, dump down, maybe comes back up and retest the fib. This just going to get wrecked. And if you think you got this at a good price, I hope it was $4. Okay, I hope it was $4. Because it made it up to 19. I remember people were getting bullish up here at 19, and I said, better wait for a close. Better wait for some consolidation. Same right here. This is it. We're breaking out. We're breaking out. Oh my God, no. All my money's gone. And I live with my mom. USAS getting absolutely fucking hammered, bent over, and getting destroyed. Just getting absolutely crushed. I expect it to continue getting crushed until it starts showing some form of life. But at this point in time, I'm assuming they have packed up their shovels. They are no longer standing next to the empty hole in the ground, and they have gone out of business. Tilray, very weak. Below the 200 exponential on simple. They are rolling over to the downside. It looks very, very weak here. Pot stocks look terrible. ACB, even worse. Trying to show a little bit of love here. Trying to move to the upside here. This thing, it looks like it wants to come back down to $5. Maybe $3.75. God, I mean, showing a little bit of bullish divergence right here. Did it already play out? I don't know. Maybe if it gets 821 cross again, we get a nice little move back up to $9. I'll play that. I'll play that move if we start to see some kind of life out of this. But these pot stocks look terrible. Speaking of terrible, CGC, Canopy Growth. I mean, this company, I guess, went out of business. It's like the worst chart of any asset class we can even look at. This has like the worst chart. The 8 and 21 or the 200 have rolled over. Can't get above the 8 or 21. Slowly just grinding out lower and lower and lower. Trying to show some kind of bullish divergence. But I mean, at this point in time, I got to see bullish divergence on like a weekly or something. This is just so bad. So bad. They're like, but legalize it. We already lost the 200 exponential and the slope. 200 simple is rolling over. The last time this happened was on the retest back here. And then from that sell-off, I mean, it sold off another 58%. So is this thing about to lose another 50%? I mean, if it loses another 50%, it's going to be worth $8. God. I mean, this is like, it looks like it wants to go down to like $10. I mean, maybe it puts in a higher low here. But, you know, probably not tomorrow. So we'll take a look at it next week on Sunday. And you know what? Probably still going to look like shit. Uranium got a nice little bounce off the 200s as we were discussing. Back above the 8 and 21. Trying to come back up here. I think it wants to come back and retest that $21 range. This is Youre Global Uranium ETF. Couple green histograms. Hard buy coming out of the bearish control zone. Back above all the moving averages. Dun, 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 dun. Resistance at $20. Could we get back up here to 21? Yeah, probably. Is it just going to look like a lower high and then sell back off? Yeah, probably. I think uranium is probably not going to be putting in any new highs anytime soon. UEC, same thing. Uranium Energy Corp topped out here. Been slowly just selling off. It was very clear when we broke down from our key channel support back here. Flipped the 821 over. This thing got even less of a move. Lost the 8 and 21 and 200 exponential. It's trying to reclaim the 200 simple now. If it consolidates here long enough, I think it'll move back to 250. After that, maybe 305. But I think, honestly, it's more likely to go down to $1.75. So, oh, geez. I mean, definitely putting in a little bit of attempting to put in some kind of bottoming pattern here. Back above the slope line, still red. Hard buy signal coming out of the bearish control zone. Maybe it does something. I mean, really, though, should have got in at $2, obviously. But if it consolidates here for a little bit, I could get slightly bullish on this. You could argue there's a 14% upside here, but you got to just run a tight stop loss and say if it drops below the 821, you're back out again, and it's probably going to put in a new low. Not you, me, but, you know, you in the form of me if I was talking to myself watching the stream later on and there's nobody else watching. CCJ, Chemico, broke down from our key channel here. Bouncing the 200 exponential and simple as expected, back above the 821 at key Fibonacci resistance. If this breaks back above here, it looks slightly more bullish. But again, this, I mean, what is it starting to look like now? Does it have to play out? No. But it's sure looking like it's looking like what I don't want to see if I'm bullish on Cameco. I mean, it's looking like it's just going to put in a head and shoulders topping pattern and bring us down to the 382, which just so happens to be our target, and have confluence with like all the fib levels and be a breakdown below the 200 exponential, at which point in time it'll probably break back up and retest them as resistance. There'll probably be a scalp to be had right there, and then we'll probably break down lower. But honestly, I mean, look, maybe it doesn't happen. Maybe it consolidates here forever and then just breaks to new highs and uranium takes over the world, but probably not. URNM, same thing, bouncing the 200 exponential and simple back above 236. You know, at this point in time, these look like they've topped. They all look like they've topped. This looks like a reaction rally off 200 exponential and simple. You know, put in a lower low right here. You could argue there's a little bit of bullish divergence. The divergence is about to play out. I expect a target of like $60. Maybe just put in a lower high right here. But again, is this just going to, I mean, does it just turn into a big head and shoulders? Probably. Copper looks weak, bounced to 200 exponential and simple perfectly as expected, came back up to 821, back above it, trying to push back to the upside. Same thing. You know, if you were late to the party on copper, you should have just, like, the cops are here now, so busted. Looks terrible. You could argue the head and shoulders is like slanted to the upside and already played out, and it's going to break down. I don't know. I think this ends up back down to $21. If it starts coming up here and putting in new all-time highs, or new all-time highs maybe, but 1.618 looks like a perfect spot for this to top out, and it probably has. Lithium LIT coming back up here, retesting. I really need to see this break out to new all-time highs. I want to see it hit our target up here to the upside, but I mean, it's hanging on for now. I'm bullish on lithium long term. Same with copper, same with silver, same with all those things. But right now, you got to show me something. Hydrogen, HYDR, doing exactly what we said. Came back down here to the 1.618, hit our target perfectly, bounced up, got rejected off of the previous resistance, came back down, put in a higher low, multiple green histograms, left the bearish control zone, pushed all the way back up to the like center area of, you know, our interest, which is a 1.618. Maybe it crosses back up. I think it runs all the way back up to the top. There's not enough meat on the bone. This is too tight of a range. It has to break in one direction or the other to be like tradable, in my opinion. LBS1, lumber futures, looking like a rejection candle here. It's probably just going to consolidate in this range between the 8 and 21 and the 618. You know, definitely put in essentially what amounts to triple bullish divergence. We have a drive here from this push down, a drive here from this push down, a drive here from this push down, 3 lower lows, and then here we have a low, a higher low, a higher low. I expect this bullish divergence eventually to play out and obviously give us this trade setup. We're still waiting on this trade setup. Obviously, it is already engaged to the upside, slightly at least. We'll see, though. Does it get there? When it does, I think 657, it's going to get wrecked at. Could this easily underperform because of fundamentals? Yeah, there's a ton of wood stocked up everywhere, and a lot of places paid way too much money for it. So, but we are seeing momentum pick up. Hard buy signal coming out of the bearish control zone, multiple green histograms, blue slope line coming up on the 0. This looks like it wants to push up here. Could it get back up to 821? Technically, yes, but fundamentally, I doubt it. Anytime soon, at least. Caterpillar, I mean, just like dead cat bouncing the 200s. Looks pathetic. If it takes out this area at 222, it's going to start looking good. After that, 225. Look, every time this breaks down from one of these channels, it goes sideways to down for like a year and loses 50% of its value. So, I mean, we already got our measure move played out perfectly as expected. So, you know, it's building some strength. Blue slope line, trying to come up here, back above the 821, above the 200 exponential and simple. So maybe it runs away here, but there's plenty of other things that look better. Speaking of them, Deere looks much better, had a much better move, underperformed on the breakdown, basically just cruising in that same channel, broke down from it, coming back up here. This could easily put in a new high right here, get rejected, and then sell off. Maybe it doesn't get rejected. Maybe it keeps cruising. I don't know. Looks like it's trying to push up here, bounce perfectly off the blue slope line. Looks like it's building some momentum to the upside. Back above the 821, save the cross. Looks much better. But you know, Caterpillar's a little more like industrial, like buildings type stuff. Deere's a little bit more like farm equipment type stuff. So you could argue that it makes sense that people would want more farm equipment as we're having like crop shortages and stuff like that. I mean, you know, there's fundamental and technical reasons why. AM, Antero Midstream Corporation, that water play, that H2O, that liquid, bouncing that 200 exponential and simple perfectly back above the 821, trying to creep up here higher, bounce the 618 perfectly on the macro. I think it's probably going to try to push up here to like 13 bucks. I was getting a little bearish on this. It was looking weak, but honestly, I like that reflex rally, at least for now. Let's see what happens. I don't want to see a situation like this where it touches it, bounces up, and then goes lower. I want to see it find support here and then take out the high. So, you know, powerfully moving to the upside, hard buy signal coming out of the bearish control zone, multiple green histograms. We'll see what happens here, though. At resistance now. The next, like, 20 cents is going to make all the difference in the world. If this thing starts to look real bullish, I'll probably reposition in this. Cemex. Saving that 821, trying to bounce it. Did not get down as low as I thought. So, you know, we have a low here. We have a higher low. We have a, you know, essentially third higher low here. Not putting in any divergence necessarily, maybe between like these 2 points right here. But essentially, it looks like it wants to move back up here. I think this thing's going to come back up and try to retest the highs. We'll see what happens at like $9. But again, infrastructure play could be good. We need that cement. Cleveland Cliffs. Still just kind of chopping sideways here. Reclaim that 821 cross, which is good. But really, it's really got to get above this lower line of the channel. I mean, it was operating inside this channel forever. I want to see it reclaim this channel, consolidate, and then continue. If it does, I'll get very bullish on this for continuation. It's going to look like a fake out, like spring, breakout from the bottom, consolidation, and then move up. But again, steel stuff has been doing pretty good lately. So Ford hanging on for dear life. You know, did not get the measure move to the downside. That's good. At least not yet. But again, broke out of a very key channel. You know, front ran the 200 exponential and simple slightly. Left the bearish control zone. Couple green histograms. It's coming back up here to retest like $14. So fundamentally, though, it's going to be tough for these car companies, man. I mean, their earnings next quarter are going to blow because they basically have a bunch of cars just sitting around that are new that can't be finished because of semiconductors. So it's hard for me to be bullish on this for like the next quarter. Any of these car companies. GM broke down below the 200 exponential and simple, played out the majority of the move. Same thing. Channel it's operating inside of, front ran the 236 slightly. This looks much more toppy to me. We'll see what happens. It's probably going to move back up here and get rejected. There's a ton of resistance and 200 moving averages at like $54, but that's not a 10% to the upside. I think it gets there. But realistically, what's the trade setup? There's probably not one right now. No divergence, nothing like that. Doesn't. Plus, it's GM, so. Hasbro showing some strength here. Again, bouncing the 200 exponential and simple as expected. But this is what I don't want to see. I don't want to see something just getting propped up by the 200 exponential and simple. I do like that it broke to new highs right here, but then it came straight back down. So if we break through the resistance level here again, I want to see it consolidate, and then I'll be bullish on continuation. But when we see a gap up like this, did we just come down here and fill the gap, and now we can go higher? Maybe. But I really got to see this breakthrough resistance. As far as I'm concerned, though, this channel is what we're paying attention to. Blue support, yellow resistance. One of them has to break, and continuation for me to get bullish or bearish. Works. Again, was not able to hold that level right here. Looks like it's about to get the 821 cross. I will probably take a buy back off the 200 exponential and simple, as it is just flipping these over after years of getting just absolutely decimated. I think there'll be a nice trade somewhere off this range. So when it starts to roll over down here at like $2 again, I'll pay attention to it, and I will look at it. But right now, looks like a gap fill from back here. Almost done. Any sphere looking slightly more bullish. It is holding these levels for right now. holding that support. We'll see what happens. I still would wait on this for like a 260 retest. Again, I want to see it come back down to the 200 exponential and simple. Do some kind of retest maybe off this fib level, and then I could get bullish on this thing. But I mean, the upside is like exponentially good if this ends up being a bottom, which it's starting to really look like, basically like an inverted head and shoulders. If we see a break of $9, I mean, this thing probably just goes parabolic. But again, you know, it's been in a confirmed horrible downtrend trend since 2014. It was $1,400. I mean, and now it's $4. So it's going to be very hard for this to ever move back up. But if it starts picking up some momentum, massive gains to be had, as I'm sure somebody's just hodling. Weight Watchers showing some strength. Trying to come back up here. Are we coming back up to fill the gap at that 30, that dirty 30? Couple green histograms coming out of that bearish control zone. It does look heavy, though. It looks heavier than it went into the lockdowns. Looks real heavy. Lot of pressure. Been eating those ho-hos, those Twinkies, drinking too many sody pops. I don't know, guys. If we break above 25, though, I think it shoots straight up to 29. That's a trade to be had, in my opinion. More than likely, though, probably gets rejected right here. I do like it to come up here to like 25 for a retest. Maybe a 7 to 10% trade to be had. But I mean, look, every time it's like V-bottomed off one of these big sell-offs. So, could be good. There's, you know, you could take a stab at the big, at the Weight Watchers if you wanted to. You don't want to poke the big boy, though. You don't want to pop the old Stay Puff Marshmallow Man, if you know what I'm saying. Walmart, man, looks like it's got that double top. Consolidating here at the top of the range. Hard sell signal, left the bullish control zone. All red histograms. Looks like it's losing the 821. Walmart coming back to retest the 200 exponential and simple. Probably another entry on the old wall fart. Wrong damn tool. God, I always get psyched out by the fib tool. Probably going to do something like this. If it comes back down to 200 exponential and simple. Tight little range, but 2-to-1 risk-reward ratio. Not going to get rich off this, but could be a nice entry if it does go parabolic. But looks very topped out at this point in time. This thing has not exactly been moving, though. I mean, we're back at September 2020 levels. I mean, talk about dead money. You know, Amazon, Netflix, Walmart, a lot of these ones that should have just crushed it have been dead money for like a year. So what's going to happen when things go back to normal and like their earnings aren't amazing and they don't get like massive inflows? Probably underperform. So and we're back to C Limited. That's it for tonight, guys. Hope you all enjoyed the streams. Awesome. Thanks, says Gabriel. Awesome. Thank you, my man. Hope everybody enjoyed it today. Appreciate all the likes, subscribes, comments, interactions in the stream. Appreciate everybody being so positive. More than anything, though, appreciate the group members. If you too would like access to the indicator I'm using in this stream, it is offered only to the group members. Once you join, though, you only have to stay for 1 month. You can have the indicator forever if you want. But I highly recommend you stay in the group because it only takes one good trade and we crush it and outperform an entire year's worth of gains in the stock market. So there you have it, guys. That is our Wednesday midweek market update. I am Crypto Trend Trader. It is 11 p.m. Eastern Standard Time on August 25th, 2021. Stay healthy, stay happy, take care of your family, make gains, protect your principal. Make them dollar bills, y'all. And remember, we're always looking for trading with the trend. We're always looking for high risk reward ratio, which never really made sense to me because really it's high reward to risk ratio and probability of success. So protect their capital, make those gains, and catch me on Sunday for our next live stream. And I'm out of here.